Okay, welcome back, guys. So this week, what we're going to be discussing is precision trading. Now, last week we went over a couple of things about supply and demand with a dash of evil. I hope you guys liked that section there. I tried to give it as much story as possible, so it's very easy to understand and easy to pick up on the material. So this week we're going to go into something a little bit more advanced, and I'm going to keep this week just solely on this purpose of making your eyes used to spotting these areas for precision. Now, precision is something that it's a hit and miss for a lot of traders. Okay, now for example, when you study buyer's territory, seller's territory, and all that stuff, we understand the general idea of the direction of the market, right? But what makes a trader really pro is the ability to grab a trade from the absolute best prices to go in the direction he needs to go. Okay, that's precision trading right there. So it's as if saying, okay, I know this is seller's territory, and in this seller's territory, I'm going to wait for a pullback, and I'm going to get a price that's up on these lines right here somewhere, saying I know how to get that price. Okay, without the idea of I think this is good. So we're going to remove the I think areas, and we're going to go into a little bit more detail of, do you know where it should be? Okay, so this has a lot to do with what we discussed last week about using the extremes. Okay, and if you use your logic that I've always taught you guys of, if the market's going down, are you thinking buys? No. How about now? Are you thinking buys? No. How about now? Are you thinking buys? Oh, you're thinking about it. You're worried. How about now? Are you thinking buys? No. Here, everyone starts to think buys here. So you notice how people get in very, very late? So how much percentage of people are in here? Not much. How much percentage of people are in here? A little bit more. How much percentage of people are in here? A lot more. Right? So the later in the extreme, a lot more people get in, and we're going to be discussing when to find out the lot more people that that we're talking about here, and seeing at what stage do they get on the wrong side of the market, because that is going to be useful for our precision trading. So let's start with an example, and then we'll go into more videos for more examples. So example number 1. Okay, so let's take a look at this, saying that, all right, the markets are going up. Okay, some people are looking at this like, oh my God, this thing is starting to turn into a buy. And as it's starting to turn into a buy, it's a pullback that most people will do a pullback buy, right? That's just a general way of doing it. Like, imagine if that's you and me saying, oh, that's buyer's territory, let it pull back and I'll do the buy. Now, what happens to that buy? It starts to go up and then it crashes on them. Okay, so it's as if what we're looking for is in a downtrend, when the market's pulling back, I want to find the absolute last buyer who was wrong-footed, or who was in the wrong direction. That becomes your extension for precision trading. Okay, we're going to be using those areas to understand that, hey, that's the spot where we're going to get some reactions from. Okay, and that helps you do a little bit some pinpoint trading. Now, of course, there's going to be a few pips here and there, because we are not in the futures market. We're in the Forex market, where prices do differ a bit. So there is going to be a slight variation in that spot, but it is that spot that you're going to get some reactions from. So let's take a look at more examples. On to the next video. Okay, so in this example, we're looking at pound Aussie. All right, so we're on the 4-hour charts on the pound Aussie, and what we're doing is if we can just assume that the daily charts is on an uptrend, and what we're looking at is, let's say, something like this as a buyer's territory, and the guy who started it somewhere down here. Okay, if you do not know why I'm drawing it like that, and you're still having confusion, like why aren't you doing it like at the very last piece and stuff like that, then you need to watch over the MPA course or go over the CBC, which is a core basics course, because you still need to understand how the universe above and below works, and that's a very critical aspect. So I can go to the daily and show you that, but it's just going to be a waste of time. So I just want you to try to understand that this, from if looked at from the daily, it does look like it's an upward momentum, and somewhere around here should be buyer's territory. Okay, now as being on the 4 hours, we're watching for pullbacks coming in. Here we go. Here's pullbacks coming in. Sellers come, pulls back, support resistance, bounces, comes down, new support equals resistance, bounces, goes down, new support equals resistance, that just goes straight up like a V formation. Okay, well, V formation happened. It's like, okay, the big boys are back. We need to prepare for our buys. So we need a test to show us it cannot make a lower low anymore so we can prepare for our buys. But at what point do we make our buys? How do we know at what area? So we're going to use that logic for precision. So what I'm going to do is I'm going to look for that last buyer. Let me just clean this up for you. In this pullback mode, I'm looking for that, last seller who was in the wrong direction. All these sellers made money. Sell, that worked. Sell, that one didn't work. Like somewhere in here, someone tried to make a pullback sell that failed on them because the market just jumped up really quickly. Okay, not visible here, but let's go in one time frame deeper to pull out that guy and see where could he be. So what I'm going to do is I'm going to draw a circle around that area so we know where to look for. This is 8:26:27, something like that. I have it set up here for you guys. Let's go into the 1 hour, one time frame lower to see the precision of that. And voila, here we are. So now that we're here, I'm gonna make it bigger for you guys so you guys can see. Okay, so there was one support resistance there. They made money, right? Pull back down, lower low happened. And then new support resistance happened, pull back down, lower low happened. They made money as well. And then here's the last sellers now. Here we go. Here we had a pullback there. Someone hit that sell over there that came down, didn't make a low, and jumped right against them, and they had a stop loss. So it's that little guy right there who tried to hit that sell. Okay, and if we contain him, we're looking for our precision areas where the markets can pull back to give you your entries. Okay, there's a lot more to precision trading, but right now this is the key element to spot where these areas are happening. Okay, these are the spots you want to monitor. So you're always looking for, well, did the guy make any money? The last buyer or the last seller. If he made money, then it's not there. The spot's not there. But if he didn't make money, and while he was trying to make money, it just wrong-footed him and it jumped on the other end, that's when we know, there's money stuck in there. Okay, there's money in there. Okay, so let's take a look at something else. Let me just scroll back, see if I can find a spot for you guys here. Do another example. Let's see if we can find one onto the sell side. Okay. All right. So here we are. Same concepts happen. Seller, 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 sellers, and then boom, things turn around for a V formation. Who's the last seller in this downward move? Down, pull back, support resistance, down, pull back, support resistance, no down. No down there. Okay, if I open this up on a lower time frame and extract that data out, so let's see this on this is the 8th of March 8th. Let me go into the 15-minute. Let's go into March 8th. Okay, there we are. So how are we going to find, once that sell happens, the new territory is seller's territory? We're looking for any kind of pullback where people will attempt sell. So like, okay, we got an attempt here to try to hit the sell, and it went boom, straight up. We got an attempt here, you see that tail? Boom, straight up. So in this zone, we're getting some kind of areas where people are attempting their sells. Okay, unfortunately, this market is way too strong and doesn't reach this area to this precision level. It goes from a little bit higher. Okay, So what I'm gonna do is for you guys for this week is just keep practicing these areas for the last buyers or last sellers and ask yourself this one question. Did he or she make money if they did that sell or did that buy? If the answer is no and they got stuck in there, that's an area that's going to be used again. Okay? We'll go into the logic of why and everything next week, but I want you guys to keep spotting these areas. Once you spot these areas, I'm going to go into, I know you might have some questions by looking at it this week, like, wait a minute, Armo or Naveen, here's an area on this day, blah, blah, blah. How come it's not pulling into that area and it's pulling in and it's going from a much higher area and stuff like that? We'll get into all of that as we go into more and more weeks of the timing. So hold your questions for now. I just want you to observe this area and monitor how clean these precisions are. And I want you to start eyeing them really, really well by when you're looking at the chart, like, okay, there's an area there, there's an area there, there's an area there. These are all working in the extreme areas. Okay? The more the extreme, that means more people are jumping in. For example, here, look at this upward movement, right? The more high it goes, the more people jump in on a higher and higher level. And the higher the level where people are jumping in on the buys and they're getting wrong-footed on the wrong direction, that becomes your area for precision. Okay? So we want to be looking at these areas, spot them really well, and I'll see you guys next week and we'll go into more details of how this stuff works. Cheers. Okay, so in this example, we're looking at Euro USD on the 60-minute chart, and we can see that according to the higher time frame, the 4 hours, we're looking at some kind of a buyer's territory here. And then our trading time frame 60 is saying, okay, well, we got some pullbacks coming in, rests a little bit, goes down deeper, more people are probably getting involved, followed by a V formation. It's like, uh-oh. Well, a V formation, is starting to give you signs that, hey, it looks like the big boy is coming back. Now, I need something what we call a test, right? Which is, okay, show me you cannot make a lower low anymore, and I am in. But that show me you cannot make a lower low anymore is you can wait for this to come down and turn around and then get a trade right here to get in. Get a trade right there to get in, or we can look at an area of what is the possibility of where it can react from. So as we talked about in our previous video, what we're looking for is, in this particular case, the last seller. So there are some sellers in here, they're coming in, just very few sellers. Then they use support equals resistance to hit that sell. When they hit that sell there, did they make money? Absolutely. And then it comes back to the new support resistance right here. Someone hit that sell there. Okay, they didn't make any money because the prices didn't go down. In fact, it went straight against them. Now remember how we say when the first move happens, how many people get on? When the next move happens, how many people get on? People get on more and more and more the further the pullback happens. So we're looking for the absolute last guys to get involved. Okay? Once we figure that out, who the last guys are, we get a better understanding of where our reactions might happen from. Okay, so let's take a look at this. Let's go into, let's say, the 15 minutes just to show you that spot right there. This is the 16th of March. Let's go in there. Okay, let me just go directly to that date. Okay, here we are. I'm gonna make it larger so you can see it. Okay, do you see that support equals resistance there? People were selling that, but that sell did not perform and make lower lows. In fact, it just came down and boom, right up in their faces. So if I bring that out to precision, saying that these are the areas where the market should react from. Okay, those are the sellers. Now, if you want to get really, really precision, okay, which I don't recommend, is just like we say, it's always people towards the end getting in. Okay, so who gets in the sell here? Not many people, but who gets in the sell there? More. Who gets in the sell there? More. It's the same thing you can do when you look at stuff like this. Is you can look at it like more and more people get involved as they get lower and lower into the move, thinking that, oh yeah, it is going down. Okay, and that becomes your absolute precision for here or for here to activate your buy after the V formation that we saw on the 60. Okay, let's get into some more examples. Okay, welcome back, guys. Now this week what I want to do is I want to touch base on V formations. Now since we are talking about timings and stuff like that, we need to understand, when you studied the market and you're saying, let's say the market's in a downtrend, right? Here, let me draw this. It's in a downtrend and you're getting some pullbacks coming in. The pullback has some logic that buyers are coming in. Moment they come up higher, you're like, okay, the logic is there, buyers are stepping in. And as you start to see your V formation kick in, you're looking at some kind of information about precision, about now, at what point do I need to enter? Okay? Because after the V formation, it's basically, if you're looking at it in terms of Rubber Band Man, is Rubber Band Man, as he keeps running and running and running, he's fully tired. And now he's going to make his last attempt and fall. Okay. That's one way to look at it. I want you to look at it in a different perspective today, because now it's what's gonna do. It's gonna help you look at it in the way I'm trying to explain it right now. So let's do it this way here. Okay. In an area when you get a V formation that's 100%, okay, prices can test as high as the probe area, which is like that. That can be the probe, right? No higher high. Or it can test as high as the recent high, or even poke above the recent high and come back down. Okay, which means somewhere like that, or it can even do something like that. Okay, these are possibilities. Okay, on the other hand, if you have a similar situation, but the markets, instead of doing a 100% V formation, it does something like a lopsided V formation or an aggressive V formation, then what it does is it cannot reach this high. The chances are less. It can only reach back to its nearest support and resistance. Okay? we're gonna get into the reasons of why. So this is the overview. And with this overview, I'm going to explain what are the details of why this happens. Okay, let's go on to the next video. Okay, so let's look at the regular V formation, or what we call the 100% V formation, right? It's the one where the buyer is running, he's running, and then he comes down and he does a 100% rest. Now, why are these ones more capable of poking up really high and stuff like that, or testing out really high? Now, I want you to start thinking like as if you were the buyer. Okay? If you're the buyer and you say the market has gone up and it's breached this area, okay, how do we normally do things? Oh, it's breached that area. Who started it? This guy started it. So as long as it's above this guy, it's still a buyer's market. Same thing happens when it breaches above here. It's like, okay, buyer's market. This guy started. As long as it's above this guy, it's still buyer's market. So at this stage, the buyer actually hasn't quit yet. He still has momentum available. Now, the V formation is a sign that shows you the big boy is back. Okay? So, a couple things we need to know about V formation is we want to distinguish this side to this side. Okay? If the move up is choppy and the move like multiple candles, and then the move down has, let's say, 2 candles and it erases all that, that's a good sign. Okay? If the move up is very aggressive and the move down is very aggressive, that's a good sign. If the move up is very aggressive but the move down is choppy and has a lot of tails on the bottom, okay, that's not a good sign, because a V formation always tells you your big boy is back. Okay, that's the reason why the Rubber Band Man's resting 100%, because the barrier up here is so powerful that something is pushing it back really, really hard. Now, you need to observe, is that something there or not? Okay, if the something in this instance is not there, you want to be cautious to get ready to sell, because it can poke possibly higher or even continue to do a next set before coming down afterwards. Okay, so you want to keep these things in mind when it comes to checking out your V formations. Now, let's take a look at it in a upside down example. Let's say the market is in an uptrend. Okay, then it starts to pull back. Okay, in this process, it starts to give you a V formation that is equal, right? Like 100% V formation. It can test down to your probe area. Okay, he can possibly come down to your recent high, or he can even possibly poke out and then come back in. Okay, because on 100% V formation can also turn the market into a range temporarily before taking off, right? Markets don't just go up and then go down and go up and go down and go up. Like, they need time to do their downtrend. Okay, from the downtrend transition, from the transition resume. Okay, it needs to go through that process. So sometimes you'll see a sideways range before a takeoff. So you got to keep all these things in mind when it comes to an equilibrium. Once again, why does that happen? It's because imagine if you were that seller and that seller is coming in a couple times. When the V formation happens, you're still looking at this as, oh, that's seller's territory, and that's the guy who started it, so it still must be a sell. Okay, now in this process, when the sells are trying, and you can see a couple times after several attempts the sells couldn't make it, and as that's rolling over, you're like, okay, I think we're good enough. Say I've seen enough of the V, and it's the reason why it's not able to come down, it looks like because my V is real. It is the big boy holding the markets. Okay, and then that prepares to take off because it's cleared out any of the guys. So let's take a look at the aggressive V formations or the lopsided V formations, and then let's do some examples there. Okay, so now we're going to be looking at some aggressive V formations or V formations that are lopsided, which means one is bigger than the other. Okay, so let's say you're in an upward market. Okay, in an upward market, the market pulls back, holds, pulls back more, holds, pulls back more, and then the V formation doesn't stop here. It actually goes a bit higher, and it's like, whoa, that's really aggressive. So why is it that the test doesn't come down, why is there a less chance for the test to come down very, very low or even poke it? Why does it stay as high as possible, test just in this area, and then usually take off? Why does that happen? So let's discuss this. Same situation. Imagine if you were that seller. You're selling this, pulls back, it's selling, pulls back, it's selling. Now in this whole process, you're like, okay, seller's territory, the guy who started it. Seller's territory, the guy who started it. But the moment you get a V formation that goes beyond 100%, aren't you looking at this like, okay, abandon ship, right? So at the moment when you have an aggressive V formation, two things are there. One, your big boy is back, and he's back aggressively. Two, all the sellers quit, which means your test can end up being just around in this area prior to takeoff, which is going to be at your nearest SNR. Now, there is another situation I want to remind you about. Okay, there's another situation I want to remind you about. If you're in an uptrend, let's say, and the market pulls back, pulls back, pulls back, pulls back, pulls back, and then you have a V formation that's like this, it's not going to try to come down to this one. Again, it will try to use the closest one as leverage to resume. Okay, so keep that in mind, and that these aggressive ones, they really turn the market around, and all the people who were selling are completely selling in the wrong direction, and they're probably stopped out, if not chasing the market into the other direction and saying, okay, screw this, I'm not selling this anymore. Okay, so you got to keep these things in mind when it comes to lopsided V formation. So now let's go into the charts and let's look at this, because this is good for timing to know how deep is your test going to come in. Okay, so let's go into some examples on actual charts. Okay, so in this particular example, we're going to be looking at the buy direction, and if we can see here, we can see that this is the buyer's market, and we're going to see how this turnaround happened using that logic of, okay, if we know when the V formation kicks in, at what point do we need to start getting ready for the trade? Okay, So let's go into the 1 hour to see this in detail. Okay, we are here on the 1 hour. Let me just scroll through that date. There we are. Okay, so let's clear this all up. Okay, so if we take a look at this, okay, this was the original area, sorry, this was the original area for the buyer's territory. The guy who started it's down here somewhere. And we're looking at this as, okay, there are some pullbacks coming in, and that's like a V. But that's so shallow. I don't think any buyer turned into a seller, so there's no logic there. But then once he doesn't make a higher high and starts going lower, yeah, that's going to get some people freaking out about this upward move and thinking that, oh, it looks like it's not a buy anymore, it's a sell. Prepare for sells, you know, it's making lower lows. You holding support resistance to make lower lows and everything. So as it's coming down, little rest, it's coming down, little rest, and then unable to come down again in this whole process. And it's like, well, it looks like he runs again, and then could that be my V? It's a possibility, but you have to remember one thing always, is a V is your big boy coming back. If you look at all of these candles here, does that actually look like that's a design of your big boy stepping in and saying, I'm back? The same guys who were here, you think these same guys are the ones who are making this little V formation and saying, I'm back? It's almost like, I am back. Very, very whispering, right? Like, it's like, I don't believe that's my guy. Okay, but later on, after he tries again, and then it's a V formation here, it's like, whoa, that's extreme lopsided. Now notice the extreme lopsided, the test doesn't come on the other side of support resistance here, but rather it stops here. Why here? It's because if you take it to the left, that is the closest SNR he's going to use as a high probability that he's going to use that area as leverage. And when he holds there multiple times, it's like, okay, I think that's it. We're going long from here. That increases your odds for safety, that your trades is going to work now because you're now in the momentum with the big boy again. Okay, so let's take a look at an example with a 100% V formation. Okay, so in this example, we're going to be looking at how V formations use 100% to and see how the tests come in and how long that kind of stuff takes. So let's take a look at this buy example right here. So if we say this is buyer's territory, this is the guy who started it, and then we're looking for a pullback so we can hit the buys from, right? So let's go into, let's go into the 60 to see some details on that. Okay, so here we are, the markets have gone upwards, and here's the pullback phase. Well, we can see clearly the pullback has caused enough panic in the market. People will be switching to sell side as they see their SNRs have been broken, they're not holding anymore, and you know, each attempt gets lower and very aggressive, so they're definitely in panic mode there. Okay, as it comes down, notice this pullback. He pulls back from here to here, okay, and then he comes down running again, cannot make any lower lows, some attempts here, then he rests again. It's just like, look at the way these things are doing. We can argue that, but that's a red candle and immediately a green candle, and that green candle looks like it's overtaken the red candle. No, don't get caught up into that. Remember, a V formation is your big boy coming back to life. Okay? So when you see it coming down later and later and later, it's like boom, right there. You know, that's your V right there. So it's like, okay, so is it a lopsided V? Is that his last run, the red candle there, and then he made a lopsided V? Or was his run down from here all the way down to there, and this V is 100%? And the answer is the V is 100%. We're gonna not count these little itty bitty things here as a run or the rest, because this could be dead hours in the day. The market's waiting for a news or something like that. There is no participation. So in this process, okay, we don't generally do this, but I'm gonna make one more video that goes over what we call the fine print of, well, exactly what do you count then, or what do you not count? Because I know some people are very bent on I need to draw this perfectly instead of the story. And I want to tell you that don't be like that. Don't be so bent on how should I draw this absolute to the bone. You need to be understanding, is my big boy back? And if my big boy is back, well, is this my lopsidedness or is this my 100%ness? Okay, am I counting the tails or am I counting the body? So we'll get into that in the next video. So for this video, this is a 100% V formation. And for the test of it, we can either look for the test to the probe. Here we don't have any probe because this V formation was not the lowest thing in this downtrend. This was the lowest thing in the downtrend, and that has the probe area. Okay, so he can go below the V or to the V. So to the V, he comes here, he bounces once. Okay, this can entice many people to turn long already. You need to see some attempts to say that this level is holding, this V is real, the Godfather is back. You need that data. So you need to allow them a couple attempts. And once they're trying a couple attempts, you're like, okay, that's good enough for me. It's even come down to the probe area and jumped right back up. These signs are signs of the big boys pushing back, saying, I don't want price to go below this. Every time price tries to come below that, they snap it right back up. So then is it too difficult for us to assume that was our big boy doing the V formation? Yeah, that's probably him right there. So as the tests happen, we're good to go, and we're taking the buys, and we're going right up to our recent high or our targets. Okay, so let's go into the next video where we talk about the fine print. So how do I know what to draw, how to draw, and all that stuff? So I'll see you in the next video. Okay, so in this video, I'm not going to be talking direction or anything like that. We're just going to be simply discussing the types of V's and what I like to stand away from and what I like to stand with. Okay, and with that information, we're going to go into details of why, because it's the why that always matter. It doesn't matter how I draw it, how you draw it. If you understand the why, your drawing will be correct. Okay, so again, our focus is not on the drawing. I'm sure already by now you're having some aha moments because you've seen the V formation in the MPA course, and you're like, man, every time there's a V, I'm always preparing to trade, but then, oh man, just that last minute, I just don't know how to time it really well. Like, okay, so I'm sure some of these things are clicking with you already, and you're getting your aha moments that you need. But now let's go into the little fine print, the questions that can arise, and I know they will arise because I've seen the questions coming in, so I know they're very extensive, and I can see how many white hairs Armo is getting. So let's take a look at some of these V's. Now, if I was to say this is a V, okay, forget the direction and anything. All we're doing is this is a V that's telling us that the buyers are coming back, right? The way I would look at this is, should I count the V from this wick to this body and then say, oh, it's from here to here, or should I count this entire tail to there? Okay, now again, what I want to remind you guys is that is a good way to think of, what should I do? Think with the logic. What does the tail represent? That someone pushed it up. Now, if you're doing a V formation to buy, is someone pushing it up? Is that a good sign? Yeah, that's a good sign. So we can include that. That's fine. But on the way up, I don't really like to include the tails because I want to know for sure at what area did my buyer start to stop. So sometimes I don't like to include the wicks because it's like, wait, why do I have such a big wick if that's a V formation? And what is a V formation? It's your big boy coming back. So if your big boy is coming back, then who in the world stopped my big boy and gave him a wick? What is going on here? Who is my big boy afraid of? Maybe I should be afraid of it too. Okay? Does that make sense? I hope you're nodding your head or saying yes out loud. But yeah, that's what we want to make sure. So let's take a look at some more V's. So this is a pretty straightforward V over here. Okay? This one to this one. Okay? That's like a 100% V right there. Okay? Comes up to its probe, tests it, starts to draw. Okay, let's take a look at some other ones. There was one here I had looked at for you guys. Okay, here's a lopsided one. This one goes from here, it comes down till here, and then it goes up, but I would like to stop it there. Okay, and I would say, yeah, that's still lopsided. It's holding up in that area because the next few candles are there. But I don't want to, push it and say it came up to here. I know price got up to there, but I don't know if it's stabilizing at that area. So we want to keep those things in mind. Let's take a look at another one. Okay, what about this one here? This is the one I wanted to point out to you guys. Will I say this is a lopsided V because the sell came down from there to here and the buy came up all the way to there? It's like, that's like 3 inches higher. That must be a lopsided V, right? No, we don't think like that. In this particular case is I first have to hold off on this, even thinking, could that even be a V? Because I get that it reversed completely from here to there. It came up really high, but what is this wick? Why is the wick there? Isn't a V supposed to be my big boy? And if that's my big boy, why am I getting a wick? So that makes me hold off. But the moment I see the next candle holding up in that area, I was like, this could pass as a lopsided V formation because it looks like price is up in that zone. And that seems to be up above SNR area. But notice one word that I said, that could be. Hence, now I'm working with a whole different level of stop losses because could means I'm not certain. And if I'm not certain, I'm not going to be dealing with stops that are going to be tight, thinking that it's only going to be a recent SNR test and then take off. Maybe he can come lower. Maybe he can probe my lows because I'm not certain. So always keep that thing in mind. Is it lopsided like this, where it's like, okay, you and I and every child out there can say that's lopsided or that's an aggressive V. It's so clear, everyone can see it. But here, it's not so clear. Okay, so that one is gonna get a uncertainty, and uncertainty is bad for business. Okay, here's another V formation here. Take a look at this one. Starts from here, goes up to there, and then initially it comes down to here. It's like, is that a V formation? Is that a V formation? No, it came up and he closed right there. So it's not a V formation yet. It's in fact looks like a V formation, but it's not one yet. Then he gets lower, then he gets lower and lower and lower and lower, and then the candle closes and it's solid. Like, okay, that's our V formation, and it's aggressive. That means it's going to be holding at the nearest SNR, most likely. I'm going to put a line at where my SNR is. Let me see some tests that the SNR is holding, and boom, there we go. Okay, so you want to use these informations to time, is your V formation real or not? Not to mention, apart from this fine print of, hey, should I count the tail? Should I not count the tail? It's a yes and a no. Okay, you need to always remember this as a trader. Nothing is fine it's not written in stone. You can bend the rules here and there if it doesn't line up with your story. And in this particular case, the story always goes with the primary objective. Is my big boy back? If not, then those wicks and tails tell you a story to stand off. If yes, then you're good to go. You're good to go. So the next thing is we also want to monitor from one side of the V to the next. Okay, we want to make sure when a V happens, it's strong enough. So for example, let's say, assume that this V came from here, went down till here, and then it came all the way back up to here. Let's say 100% V. Just assumption. If you look at this red candle, very strong, but then you look at the greens coming up, okay? Let's say it gets up to there, but look how many candles, 1, 2, 3, 4, 5, let's say. So one candle down, 4 or 5 candles up. Do you think that's a solid V formation? It becomes doubtful. It's like, how can my big boy come back weaker? How's that even possible? That means something is wrong. So then you hold off. You hold off because you know what's actually happening there? What's happening is you have a strong down move here, but these little pushes up that you're seeing lots of wicks and tails and each candle separating on lower time frame, it's seller's territory, and we're getting this kind of look to it. So sooner or later, even though it looks like, oh, maybe that's a V, it looks like someone's preparing to sell this thing instead of whoever might be looking at this out. That's a V, so it should test here and go up. Okay? It's because the V design does not match the story. Okay, so always keep in mind the one thing running in the back of your head. The V is the big boy coming back. And when you see a V, ask yourself that question. Does that look like the big boy coming back? Forget the tails, forget the wicks and all that stuff. If you have to use it, use it. If you don't want to use it, don't use it. But ask that question. Is the big boy back? And if it's not obvious to you, then chances are something is wrong. Especially after this training. If it's not obvious, something is wrong. And that's when you start building your instincts to do what we call counter trend trades. And we're going to be discussing counter trend trades and stuff like that as advanced techniques. It's not going to be in the 4-course bundle because we still need to get you through this course, make sure you're on the right path, you're doing all the techniques required, and you're keeping up with the program. So let me know in the comments below. I need to do a progress update to see how well everyone is doing and understanding the information so far. So I look forward to seeing your comments below. Take care, and I'll see you next week. Cheers. Okay, welcome back guys to this week's lesson. Now, in this week, we're going to be talking about how to trade like a pro, which means how to develop instincts. Okay, I've labeled this topic flowing like water. Okay, water can be as strong as possible, it can cut through anything. It can also be soft and bend and mold through. It depends on the situation. Okay, so it's a Zen proverb or a Buddhist proverb, that's saying your whole life should be, flowing like water, where you adjust and you bend and you turn according to the situation needed. So in this particular case, when we're looking at the market, so you want to start to do the same thing. Now you've started to put some information below your belt now, where you're starting to watch how trends pull back, how they slow down, how they have a V formation, and how they do the test and then they take off, right? All of these things happen. Now, I want you to start to get in the rhythm. Now, before we can get into next week topics of tests and all that stuff, the final test before the takeoff, I want you to start to get the vibe and stuff like that. So let's take a look at an example of what I mean by trying to gauge the market's vibe, okay? So let's say the markets are going up here. Okay, as a trader with a little bit of knowledge now, I'm noticing one of the things that's happening to a lot of the students is their eye goes to this area. It's like, okay, I can see the markets are in an uptrend. I'm getting some pullback. Okay, as it starts to pull back more and more and more, let me get a V formation and I am ready to go, baby. Right? Now here's the problem with that. Is we're looking at only half the picture. We're not looking at the whole picture. And now when I say whole picture, I'm not trying to go into the big boys and all that stuff today, but I'm just saying the whole picture as in like, did you monitor what is the process, the way it went up versus the process it did to come down? That's an important piece. Just like we do the rubber band man, we look at how quickly he ran, how much he ran, how far he ran, and measure that to how he rested, how much he's rested, and to where has he rested. Okay, and also how long has he rested. Man, lots of information to keep up, right? This is something your brain is probably doing automatically right now because you've looked at it time and time again, where you're starting to gauge the momentum a little bit easier, and you're like, I can see when the trend's going to end. I just need to refine the process now. And that's what we're here to do, right? We're going to refine the process so that way we can understand it a little bit better. So let's go on to the next video so we can start looking at examples and for buys and for sells. Okay, so in this example, we're going to be looking at Euro Yen on the 60-minute here, okay? So what we're looking at is the markets are coming down very, very strong, right? Very aggressive, very strong. And then the pullbacks are coming up quite gradual, right? Gradual, slow and steady, gradual, slow and steady. It comes up high enough where it comes to an SNR area, where at the last moment it shoots up and then it shoots back down, almost like, was that even real? Is that even a probe? That's the first sign of, okay, I think our big boy is back, okay? Because we're using this side to compare to this side, right? Once we compare those two sides, we're like, okay, we get a better idea of how the pullback is happening. Now, here's another thing. Take a look at this pullback, and look at this, this movement down, and then look at this pullback coming up to it. It's very gradual, slow, and steady, and then compare it even further. Look at the first leg up. Look at the next leg up. You see how that next leg is even more subdivided? It's like it's more it has more candles in it, wicks in it, and everything like that. Look at the V formation to accompany that. Very aggressive, one candle takes it all. So you're seeing some signs of trend continuation, because in each trend you're always looking at a pullback with a question mark, thinking that, wait a minute, is this to reverse the market, or is this simply our big boys taking some profit and looking to re-add some money to it once they get enough people turning buyers, right? All right, so we're looking at situations like that. You know, there's a lot of buying and selling happening. So around this price, due to whatsoever reason, maybe supply and demand or etc., some buyers start to kick in, and also our seller starts to let go of the gas a little bit. As they step in a little bit further and further, and he sees all the buyers seem to be exhausted, he steps back in and takes the show. Now, there is difference now. Take a look at this pullback here. Look at that aggression in the pullback. Okay, followed by the next pullback. Look at that aggression there. Okay, and then look at that V formation that accompanies it. You see how weak that is? Okay, based on the weakness of that, you can see the test of it, how the test comes up. Okay, look at the test of the previous move when he went up really, really hard. Look at that little resting period, and then he blasts up again very easily. But when the V formation happened, he didn't just test up a little bit and then drop. He tested up quite high. In fact, he went up all the way to the last area where people would have bought from, you know, some support and resistance where they hit the buys from. We can see some buying activity in there that came crashing down, and then since their money is stuck in there, we're like, oh, perfect, you know. So there is an area that we can go to get that activity. However, one sign to it is, how come when the V formation happens, the buyers are still alive? That's because the V formation didn't intimidate the buyers enough for the buyers to run away, basically. Okay, so you want to keep these things in mind. You don't want to just be so rigid and saying, okay, you know, we got one leg up, we got two legs up, we got a V formation, okay, get ready to sell. No, don't keep it as strict and rigid like that. You know, that's some of the mistakes a lot of the new traders that I encounter do, and I don't want you guys to do that. You guys have come really far enough to make those silly mistakes. I want you to start to feel the rhythm of the market and be like, okay, what's actually happening? Okay, where am I supposed to get involved with all this stuff, and find out a couple things. Okay, what we're actually looking for is, if you're in a downtrend, you're looking for some kind of buyers to come in and then buyers to vanish. It is only at the stage of their vanishing is that you can come in. You should not come in based on any design over here except that idea of, I can feel it, they're gone. Okay? Now, at times, sometimes it'll just be very aggressive and run away really, really fast. So be it. Let that one run away. Okay? It is moments like those that keeps traders getting enticed with FOMO, which is like, if I don't get on this trade, I'm gonna miss this trade. As if it's the only trade in the market. You see what I mean? So every once in a while, these aggressive trades will come by. It'll do very large moves, and then it's going to be like, wait, something like this, for example. Wait a minute, where's my V formation and a test? I don't even get that. And it just runs away. It's like, oh man, next time, I'm just going to get in right there. Okay, and I put my stops up here. You know what I mean? Plans start to change. It's like, you know what, I'm just gonna do this because I don't want to miss it again. And that's the deadly nature of these aggressive ones, is then they put you on an emotional roll. And once you're on an emotional roll, the next time it'll be slower, it'll spike up, it'll take you out, and then go down gradually. So all these things will happen, and it becomes very, very dangerous. Like, look at this one. Look at that V formation. If you end up chasing it, like, oh man, I don't think it's testing back. It's just gonna go. You end up hitting a sell there. Look at that. That's gonna take you out. Okay. So there are many, many situations that you have to be patient with and take it nice and slow. Okay. Let's take a look at another chart for some more examples. Okay. So in this video, we're looking at pound USD on the 60 minutes, right? Now, same concept. So let's say the markets are in this uptrend here, right? We're looking at this miniature uptrend on a higher time frame. We'll see some kind of buyer's territory kick in here. Of course, there's an overall territory here also, but we're not looking at that. We're looking at the immediate markets so we can get a grasp of what do we need to do if we have to trade today. Okay? So we're looking at the market going up. Very aggressive, you and I can both agree. But then look at the pullback that start to come in. Even though the pullbacks are coming in one push, two push, and then a V formation. Now, I want you to look at this whole scenario to understand why is it acting so aggressive. Not only is it acting aggressive, I want you to absorb all the information that you can get from it. Not just that it's come down in multiple legs, it's done a V formation, people must be panicking and hitting the sell buttons. No, not that. I want you to look at it. It's so aggressively in a buyer's market, okay, which has everyone jumping in. Then it becomes so aggressively in the seller side, in which the buyers don't even have a glimpse of stepping in between. Okay, no separation of buyers that come in that looks like they're coming in with force, and then the leg tool is going to begin. Then it comes down again in 3 candles, leaves a wick on the bottom, and then it starts to make a V. But look at this V. 1 candle, no V yet. Next one, doji, almost a V. Next one, candle, but look at the big wick on top. Okay, so that's V, but what in the world is this thing? What is there so much selling pressure? And then look at that. If you're waiting for a test, 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 lower low. Now in this whole lower low process, it's like, wait a minute, if you were to have automatically chased it or said, let me get into this probe area right here where the V formation happened, that means this bottom here was a faker. I can just hit the buy right there. It does react. Maybe you might not hit the buy there, but when the next candle starts to show green when the wick happened, you might hit the buy there thinking, oh my god, it's leaving. I can't believe I didn't get in on this. But do you see how this can be enticing? So if you were to make a rule of thumb of what takes priority, the story or the design, and it will always come back to the story. I want you guys to always remind yourself of that. Is the story, is it clear enough? If it's not clear enough, your designs are gonna be broken. Your designs are gonna be broken and your designs will not work at that stage. Okay, so when we're looking at this and then this thing starts to pull back in deeper, okay, it starts to slow down, but then it rushes again. Recent low bounces up again. Few candles in the nearby area, drops down and pops up. Now this one, look at the aggression of this V formation here. Very, 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 very aggressive, followed by a test because it's an aggressive V formation, followed by a test that's to the other side of SNR. Okay, what used to be your resistance has now become your support. It's starting to slow down here, and then it starts to take off. Okay, so you gotta feel the rhythm. You gotta feel the rhythm of what is going on in the market. Okay, now let's take a look at this entire area, and I'm gonna show you, if you can feel the rhythm, what you're actually monitoring is something that is going to be available even on a higher time frame. Okay, this one is not so clear enough, but generally when you start to see stuff like that and you're like, oh, I don't think it's gonna go right now, it's gonna go later, it's gonna start showing up on the radar of the higher time frame as well. So let's say this was our buyer's territory, right? If this pullback right here, if this pullback is where it first started, then it rested, then the next pullback came in, it can show up on a higher time frame, which then becomes a daily 4-hour trade, which means the chances of the trade traveling is going to be further, because you're not no longer trading this based on the 4 hour 1 hour, for example. So let me show you that again. As a 4 hour 1 hour trader, your job is to get that buy and take profit at recent high. Okay, but if you know this whole thing, because it's pulled back so much, it's starting to show up on a higher time frame, then it can play according to the higher time frame's momentum, which is something what we call an eclipse, which means one time frame is lining up with another time frame. Those trades generally have a very good risk to reward trades, because you're entering based on the lower time frame, but you're exiting based on the higher time frame. It's high risk to reward, but then you have to be super pro at it to not get stopped out prior to the blast, because the whipsaws also come based on the higher time frame. So you got to be careful of that. Okay, so in this period, when you see you need to hold off and not buy here but buy later on, can also mean of, okay, so much more time has passed by, I wonder who else sees this. Okay, as in terms of big boy. Okay, the average retail trader is oblivious to this, because he's looking at this as sells, and in fact more sellers jump in here once it breaks the recent low, right? Once it breaks the recent low, they're like, oh my god, of course it's a sell. And as everyone hits the sell, they get wrong footed, trade jumps in the opposite direction. As once trade jumps into the opposite direction, maybe even a higher time frame gets involved, and that's when you have some aggressive moves all the way to the top. Okay, so some things to keep in mind. All right, so let's take a look at another example. Okay, so here we're looking at Euro New Zealand on the daily chart. Okay, we're gonna look at this market in seller's market. Okay, in the seller's market, we're watching the pullback start to come in. First pullback shows up, but then it runs away. Okay, not for us. Then it pulls back again. So it's like, okay, looks like that might be the birth of the pullback, but it's so aggressive. Two things come to mind. Why is it so aggressive? Is this a pullback, or is this a complete turn of trend? Okay, only time will tell, and the information collected will tell. So the market moves up. The next thing, it gets smacked down very aggressively. Okay, something to monitor. Then it moves up again. Okay, this time a lot of wicks and tails, but then it's still aggressive. 4 candles, higher high. In fact, he's ran further than the first move. We're taking that information in. Okay, apart from taking that information in, we are also aware it has breached to a new, above new support and resistance. It rests a little bit, and then it goes up again, and it starts to show some wicks, some shines, some signs. So in this whole process, it gives you a aggressive V formation, and then it's like, okay, there's my test, I can sell. Unfortunately, you cannot sell at this area, although the design says go for it. Okay, you cannot sell at that area. Here's why. Few things. There's way too much aggression in the buyers, which means panic for us. Okay, normally we're not the ones panicking, it's the public that panics. But when we see aggression like that, that's a panic for us. It's like, is that a possible trend reversal? We don't know yet. Only time will tell. And then once we see there's an area here for SNR, we don't know if these aggressive SNR folks are going to come back in and take the market higher from here. Which is why RV formation only comes at this stage here, once they take this SNR out. Okay, once they take that SNR out, then it's like, okay, it's holding. Let me see it hold to the underside, and then that's your test. And you're like, okay, now I'm buying it. Okay, or now I'm selling it. Sorry, when I mean buying it, I mean now I believe the story. That's what I mean. Okay, so this is how you feel the rhythm of the market and try to hold off when necessary. Okay, there will be times when you're feeling like you should hold off and then you miss the trade. There will be times when you're feeling like you should get in and then you're like, oh man, I should have held off. It's in this process of finding the right balance is what's going to make you a good trader. You have to keep playing with it And then you'll see some conservative traders will be like, man, Naveen, 10 trades, all excellent, and I missed 8 of them because I thought something was wrong. The aggressive traders gonna be like, man, Naveen, 10 trades, 8 of them I should have held off on, but I took 8 of them, and then the 2 of them that I should have taken, I held off because I got scared. Okay, losses all over the place. You have to find this rhythm by only through experience. You have to only experience this live and firsthand and go through the falling, rising and falling, until you get the rhythm automatically. I've said this before in previous webinars and even probably in the MPA course. It's just like driving a car. No one's gonna teach you how to avoid an accident. There is no manual on how to avoid an accident. How, if someone is running a red light, how do you know how they're running a red light? How do you know how the other car is going to respond for you to avoid an accident? You don't know. All you can do is learn how to drive, follow the rules, and then every now and then your mind picks up instincts where even though you have a green light, you see a car speeding at full capacity coming towards his red light, and you're like, wait a minute, I'm gonna hold off on this one. Something doesn't look right. It's out of the ordinary. Only the brain has a capacity to pick up that information. You cannot study all that. It cannot happen. So the instinct must be developed by doing it over and over and over again. When you do it over and over again, your brain starts to pick up on unusual activity. Okay? So you want to keep these things in mind, and I hope these lessons were useful this week, and you practice on it going forward to it. And then next week we're gonna go into the test phase. Once you start to get the rhythm and you start to see the test come in, how can you make sure the test is valid or not valid? We'll cover that next week. Cheers, guys. I'll see you guys in a bit. Okay, guys, welcome back to this week. We're gonna be going over the test phase. So basically, after your V formations and stuff like that, we're looking at the final stages of a trade preparing to work out. So how deep does my test needs to be? Is my test going to hold? Is my test not going to hold? This has a lot to do with precision trading. So, you might be thinking, maybe we should change the word test, because growing up in school, we all hated the word test. Of course, that's coming into your mind right now, but in this particular case in trading, test is a good thing. Okay, it's a good thing. So we're gonna be watching it in a particular way. So let me find you an example where let's say you're looking at this on a let me pick out, let's say Euro USD. Okay, we're here in Euro USD. We're going down to the 1 hour here. Okay, so assuming that on the 4 hours you're looking at this as buyer's territory when the markets go up. Let me just show you real quick so there's no confusion there. Where is it? Right there. So let's say if you're just looking at the market like that, you're like, okay, that's buyer's territory. Give me a pullback and I will eventually buy it. So then we go down to the 1 hour and we start stalking the pullback, right? So that's for the 4 hour, 1 hour trader. So as we're stalking the pullbacks are coming in, and we're watching the rhythm as the pullback comes in, holds, comes in, holds, comes in, and then we start to get what looks like a V formation. It's like, I don't think that's a V formation yet, considering how strong that sell is. Okay, moving forward, because a V formation, as we know from our previous lessons, is our big boy coming back, which means he needs to make a scene. Okay, he needs to make a scene. So chop, chop, chop here. Okay, that looks quite aggressive here, but not as aggressive as the previous one, right? So it's like, well, what if this one is the V formation itself? That looks like that could be a V formation there, doesn't it? It's like prices were coming down, they stopped, and then they shot upwards very hard. Like, that's a V formation. Now here's the thing you want to consider. If that does look like a V formation, do understand one thing. We have approached an area where sellers hit it before, they're going to hit it again. Which means if it is a V formation, the sellers shouldn't be able to do anything. Our job is now to see the test. For the test, we're going down now to a third time frame. Let me keep the line here. Okay, this is all precision stuff. We're going down to the 15 minutes now, and we're looking for wait, sorry, let me get that area here for you. We're looking for the absolute precision now. Where is it? Give me a second here. Okay, let me see on this. Okay, so we're looking for absolute precision here, right? So we're here now on the 15 minutes. Here's that V formation. Okay, here's where that V formation came in, and we're like, whoa, that must be my big boy stepping back in the game. Now what we're doing now is like, show me a test that's gonna hold. First sign, just like we read everything else, we want to see it. First sign, here comes the sellers. Just from this area here that we said they're sellers, they're gonna hit it again. They do hit it again. They come in very aggressive. How does my buyer react? Not so good. Sellers again from the same area, very aggressive. How does my buyer react? Okay, very strong. It's like, okay, good. This looks like things are gonna go well. You know, I need to get a price that's a little bit away from this resistance here. I don't want to be buying up there in case they smack it down again. But then they do start smacking it down again, and price jumps down to here. Like, uh-oh, wait a minute. I can't buy it right now. Is this not it? So we go back to our 60 right now, and we go back to standby mode, because the trade's not ready yet. Trade's not ready yet. Okay, so in that stage, that V formation is not ready yet. Things come down again, slower. But then here, very aggressive buys. Like, whoa. Okay, again, very aggressive buys. He's back at the seller area. Let's go monitor the test. Let me go down to the 15 again. We're aware what kind of V formation that is. That looks like a 100% V formation. It's not aggressive or anything. So the test can come in low. We have that in our mind. So here we are. Nice crooked V formation drawing by me. Hope that's okay. So the test is starting to come in now, right here. First move, aggressive. Okay, that means standby. Buyers do nothing. Next move, aggressive. Nothing. Buyers have no say in this. Next move, aggressive, INSI bit, and then boom. Okay, that looks like a sign that could be my buyers coming back. This was the area where sellers started last time. Nothing happens. Buyers are still fighting that. It's around this area you can say, okay, I believe with the V formation and with the test, it's go time. Okay? For pro traders, what they're actually doing is they're putting their stops right here. Okay? For traders who are looking at this and at a whole, they're putting their stops below the V. Okay? Healthier below the V in case the prices can come down lower. So you can really see how these stop losses can change the way you're looking at the market. Let me show it to you on the 1 hour. You can see the risk to reward ratios. If the entry is here and your stop loss is here for the average trader, and you're looking at a take profit back to your recent highs where the sellers hit it from again, you're like, oh, I'm looking at a 1.9 R, which is I'm risking let's say $1,000 to make $1,900. Okay, but with the take profit being the same, a pro trader is able to understand based on the test that I can put my stop just there and I'm okay with it, and turn the same thing from a $1,000 into $5,000. You know, on this specific trade, it becomes a 5R. Your risk is 1,000, and your take profit is 5,000. Now, this is extremely dangerous if you are not aware of how to read the test properly. So initially, I would recommend do not attempt these things as of right now. So take my word of advice. I'm gonna walk you through towards some more examples, and we'll take it from there. So let's go on to the next example. Okay, so let's take a look at this example right here. We're looking at Aussie New Zealand here on the 4-hour chart, and let's assume you're looking at the markets like this right there, and you're like, oh, we just got a break in the market right there, and we're seeing this is now buyer's territory. Okay, or if you want to make it more precise, buyer's territory. Like we finally broke higher high. Okay, so whoever started it, either this guy or this guy, that's okay. These are all correct. Okay, you're just looking at the market is in an upward momentum. Okay, our job now is to see if we can get a pullback, and if we can get a pullback and buy from it. So we go down to the 60, and in the 60 phase, we're looking at it like, okay, show me a sign of a pullback, and then I'll take it from there. So pullbacks are coming in, down, down. Is that my V formation? Okay, if you go into the 15, you'll notice your test doesn't stop at all, it just crashes. That can't be my V formation. Okay, we're not even getting enough sellers in here. So as more sellers come in, more sellers come in, more sellers come in, like, okay, is that my V formation? Okay, let's assume that is our V formation. Let's take a look at that on the 15. Let's see how that looks on the 15. Okay, really messy, this one. Like, okay, we got a V formation. Now, there's a problem with this V formation. Look at the sell and look at the buy. Any distinguishes that you see? One shot to go down, four candles to go up. I don't think that's my big boy here yet, because it looks like seller is still strong. I understand that the question might be, yeah, but he took it all back and he came all the way up. I understand that, but what you need to focus on is look how strong the seller was and look how weak the buyer is. That's not a sign of my big boy. Not yet, or I don't trust it yet. So when you see the test coming in, we know that this area is what may look like a V formation. We're like, okay, if it is a V formation, this is where sellers come. Let's see how the test comes in based on the sellers here. So aggressive, slows, aggressive, slows, aggressive, slow. Like, he keeps coming down, 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 down. Okay, so we got a V formation that the test is coming in very, very deep. Fair enough. Then you get this green candle. Like, okay, we got some signs of maybe my buyers are coming back. Next candle, aggressive again. Like, I'm having a hard time believing that this is actually a real V formation for my guy. Next candle again, green, choppy. Next, red, choppy. Next, red, it's even going below my V formation. Okay, where's my buyer? This is supposed to be my buyer's area, right here. This is where every time price comes here, buyers jump, buyers jump. Where's my jump? Nothing, 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 nothing. Everything's so weak, lots of wicks on top. Trade's not ready yet, trade's not ready yet. Let's go back to our 60. Trade's not ready yet, which means stand by. It's a standby because we're still in buyer's territory. However, we need to see what's the situation, because that was a fake V formation. Okay, let's go back to the 60. And we're looking at it again. We're like, okay, well, if that's not it, I know this is the guy who started it, so we're, as long as we're above that, we're okay. Prices come down again. There's coming down, look at all these wicks coming up on top. Chop, 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 chop. But then my buyers are coming in. It's like, okay, is that my V formation there? I don't believe it. It's too small, it's too dingy. But this, whoa, could that be my V formation? If so, that's definitely looking like a lopsided V formation, right? So we need to see how the test from here comes. Let's take a look here, because this area is seller's area here. This area is seller's area here, right? So every time price comes up to here, sellers keep hitting it. So let's take a look at this on the 15 here, and we see here's a seller, very aggressive. Okay, I'm not convinced yet. Buyers come in aggressive, good. Sellers hit it again, very aggressive. Not convinced yet. Buyers come back aggressive again. Sellers weak, that's a good sign. Buyers come back aggressive yet. We're like, okay, could this be the moment? But this is again, the seller hits it down, boom. Not yet. Holding buyers, is it now? Notice what's happening here. We're getting into a squeeze. It's at times like these you need to always wonder is what time of the day are we in? Over here it's Bangkok 1 a.m. which means we're in the dead zone of the market. No one's around trading. There's London's not open. New York is like past lunchtime. No. Yeah, New York is way past lunchtime. They're about to close. There's no opening markets. So we're approaching a dead zone. The market continues. Then it's like the test goes lower. Our V formation is still here. Don't forget that. Then the test goes lower. Like, okay, chop. Lower again, but chop. Lower again, chop. Lower again, chop. Lower again. It's like, oh my god, is it ever going to stop coming down? But chop is good because it's like little by little by little by little. It's slowly coming in. That's a good sign. And then comes our big boy. Still while in the V formation, he steps in aggressive. It's like, okay, I believe it now. I will hit the buy. Stop losses as a pro trader is below here. If I want to be more conservative, I can put it below my V formation. And I'm going back to my recent highs as my take profit. Now let me show you where that is. Your recent highs for your take profit is up there. Okay, you're going back up to that area. Okay, and there is a potential where the price can go even for a higher high. Okay, let's go on to another example. Okay, so let's take a look at this example right here. We're looking at the pound CAD on the 60. So let's assume we're doing a 4-hour 60 on this one as well. Markets are coming down. From a higher time frame, it'll look like seller's territory. And our job is, okay, well, give me some pullbacks and I'll sell it, right? So you're now the vendor. You want to sell. You're like, give me some buyers and I'll sell to them. I'm not going to sell down here if everyone is selling. I need some buyers. Okay, as the buyers come in, look at this aggression, right? That's not a good sign for us. So when you see this aggression come in, come down again, come up again, and then it's like, oh, is that my V formation? Should I get a test, prepare for sell? Okay, although just before even going into test for sell, we know that this is a wrong trade to be on because of the sheer power of the buyer coming in. We can't just say, well, the buyer's immediately tired because the rest is so long. Okay, he's like coming down so much. So we'll get into why this thing is a problem into next week. But for this particular case, I'm going to show you if we do somehow assume that's a seller, or that's the V formation, our big boy is back because he's so strong. Then we're looking at the test phase here, right? We're like, okay, let's go into the 15 and watch the test phase. So let's go find that spot. Okay, there we are. Where are we? Here we are. Sorry, give me a second. There we go. I don't know what I just did. Give me a second. Great. Okay, sorry about that. Had to pause the recording right there for a second. All kinds of stuff was activating. Okay, let's take a look at this area here. Okay, so we're like, that's our V formation that we're looking at. Like, oh, that's gotta be my big boy. He's coming in so strong. Let's take a look at the test. Now the test is supposed to tell you the buyers are dying. That's what it's supposed to tell you. Okay, the buyers are dying. So let's take a look at how the buyers are coming in. Okay, the first initial move up. Whoa. Angry. Sellers come back. Can't do much. In fact, leaving tails. The buyers can't do much, but the sellers can't do much. Okay, in this area where the buyers are, it's almost like, you can almost look at it like this one buyer and that's one seller. And my big boy is not showing he's coming back. Okay, and this is the area where buyers are activating, because it was also activating from here earlier in this area. So let's see what happens with the buyers again. Here comes the buyers again. First candle, nothing. Second candle, nothing. Third candle, whoa, aggressive. What's going on? Okay, but in this area is seller's area, or this area is seller's area. Okay, my seller will come to my rescue because we said it's a V formation and my big boy is back. And then I see a small red candle from the seller. I'm not convinced yet. And then following that, a green candle, a green candle. Whoa. Okay, this area, my seller's gonna come back. A green candle. My test is what we call, my test is failing. If my test is failing, I can't do the sell. I can't do the sell. Okay, let's go back to the 1 hour now so I can show you guys that area again. So that area is saying no go. Okay, that area is saying no go, and it starts to go up higher. That means it's still in seller's territory. However, the pullback is trying to go in deeper. Okay, now compare the first move up to this move up. It looks like it's going pretty much the same distance, except last time it did it in 2 candles, but this time it's doing that same distance in a billion candles, right? Like, I'm just exaggerating, but I'm trying to tell you that I want you to compare the differences. Don't count the numbers. It's like, oh, few candles, a lot of candles, same distance. I think they're slowing down. It's not enough. I want to see them slowing down together with my big boy stepping in. So they look like they're slowing down. They're going up, they're resting. They're going up, they're resting. They're going up, and then nothing from my seller, nothing from my big boy, and then this red candle comes in and we're like, gotcha. I think that's my seller coming in hot. However, I've been burned before, so I'm going to be very careful. What kind of V formation is this? Seems to be lopsided and or aggressive V formation, which means my test should be coming to the underside of things, either there or there. I'll keep that in mind. Let me make this a dotted line. Okay, I'll keep that in mind that this is the underside of it, either here or here, and I want to see a test to that area, but my test should fail. Let's go into the 15 minutes. Let's go into the 15 minutes now. Let's go back to that area. Okay, here we are. Okay, seller's coming in hot. The test comes in. Aggressive buy. I don't like it. The next candle, little red. I don't like it. In fact, let me make the mouse bigger for you. 1 second. Okay, I'm back. I'm sorry, I have to pause the video there. I made the mouse bigger for you so you guys can see it. So aggressive buyers, I don't like it. Then a little bit of sellers. Okay, that's not my big boy coming back to life. I'm aware of this line, but it doesn't mean I should just simply hit it blindly. Then my next buyer slows down a bit, and my seller comes in hot. As my seller comes in hot, I'm aware that this area is buyer's area. Maybe it's like, okay, I think my V formation was real because my seller is alive. Am I gonna bounce up from here because I can't sell right here? It's a little bit dangerous. Bounce tries, nothing happens. Next bounce tries, nothing happens. Okay, I'm good to go. That's when you say, I'm ready for that sell. I'm okay for that sell. And pro traders, stop losses are here, just above this test. Standard traders, stop losses above your V, just above your V. This is a lopsided V, so you can keep it just above your V. You should be okay. If it's a 100% V formation, then it needs to be a little bit healthier. Okay. So, but you can see pro traders, their stop losses can be just around there. And now we're looking at it like, well, can I do this trade? If my trade is like that, stop loss is like that, and my take profit is down here in these areas for my recent low. It's like, risk to reward, 1:1. Okay, I'll attempt it. That's when you have to make that decision of, are you going to do it or not going to do it? That is up to you now. Okay, so this is a more tricky example because it didn't take off from here, from this test area, but this test did work. So it's almost like you're going through that final check phase after the V formation saying, are we clear or are we not clear? Okay, so whenever you have a V formation coming in, let's say the markets are coming down, 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 and then you got a V formation. This one is saying to do a buy. your V formation is near the area of sellers, and you're saying, okay, sellers, I think you're dead, but still show me what you got. And your test is basically this little piece that says, I can't do anything. And we're looking at the test on a lower time frame to say, can I hit the buy at the right moment to take the trade to the next area in case they bother me onto the next area. Overall objective is going to be up here, obviously, but we're going to see in case they give you problems, you're able to run away from the trade because your entry is here. If it bounces from there and comes back against you, you're like, okay, out, 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 get out of that trade. And you can still make some money or break even. Okay? So tests can help you to understand if your trade is ready. So we're going to go a little bit more into details of this going into it next week, because we're going to talk about how to know the rhythm of, wait, should I start checking the test now or later? How do I even know if the trade is ready? Why should I even go check the test? How do I believe my V formation and all of that stuff is preparing? We'll go into a little bit precise details next week. I want you guys to use these videos as examples. It may be difficult, I'm telling you right now. I'm sure some of you guys might be like, I think I got it, but I need to see it on the live market. So I'm going to give you this week here to go spend the time that you have to do. Look at it in the live markets, plot some examples, look at it in your own terms. You will have questions, but before reaching out to us, wait for me to get to you on the next video, and the next video will solve your questions that you may have. So I look forward to seeing your comments based on what you're trying. However, wait till the next video to get the answer, and it will automatically answer, but do try this week. Okay, that's your homework. Do try it this week. I'll see you guys next week. Cheers. Alright guys, welcome back. So this is the next week right now, and we are looking at Euro Aussie. Now last week I told you guys that hold off on your questions a bit, because what I'm about to show you this week is going to help answer those questions, right? We've come very, very far. We've gone deep into timing. Timing is a very important topic, because now we're trying to take all the information that you've learned, that we've layered piece by piece, and I'm going to start putting that together for you guys, okay? And then we'll go more into that, into the roadmap section as well. So there's still this week on timing, and I'm going to probably extend it out into one more week, because I do feel there is a little bit more that's just comes out into my mind when I'm sleeping. I'm like, oh, and I need to tell them this. So it just jumps out at me. So I feel I'm going to extend it out a little bit longer. As it's critical. Now, I'm already seeing some aha moments coming in. However, the last week, I did sense that I'm sure that's going to cause some confusion. Even if there was no comments coming my way, I did sense the way I taught it. I was like, they're going to get confused because they don't have all that information yet. So this week, we're going to get into that. Now, I'm going to be talking about landmines this week, okay? Now, what is a landmine? Okay, just think about it. Just picture what's a landmine look like, right? You know, you can see in the movies and stuff like that, the military soldiers are walking somewhere and there's something in the floor. If they step on it, kaboom, right? So it's like a landmine. Of course, dangerous and violent example, but what I'm trying to show you is there's landmines also in trading. There's landmines also in trading where if you enter a trade at a certain area, it can go kaboom. So we want to find out where those landmines are and find out which ones don't kaboom, so then we can enter the trade. So now we're going to take all your information you've learned so far and we're going to pile it up together. So first stage is we're going to walk through of where the landmines are. Okay, so here we go. Let's say I'm looking at the daily charts here. Okay, so I'm going to bring it up to the daily chart. Here we go. As we see the markets are going up, 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 up. Let's say I did not see the future. So let's say I didn't see any of this stuff. Okay, there we go. Nice and beautiful. So we're looking at this as nice buyer's territory, right? Give me a pullback and I will buy it. Okay, so let me clear all this up. On the right side, I'll make it 4 hours because we're looking for a pullback to come in on the 4 hours. And we want to study that pullback. Now, we are aware, buyer's territory. We're also aware, Mr. Who started it. Okay, we're aware that as long as we're above this circle area, we're okay. We're okay.
Now, as we analyze the rhythm, right, flowing like water, we analyze the rhythm, we're like, buyers seem to be extremely strong. Great, good, fantastic. In this process of buyers being extremely strong, we got the sellers coming in, we got seller push very aggressively, hold off a bit, push again aggressively, hold off a bit, push again aggressively, hold off again, push slowly, and then aggressive hold off. It's like, isn't that my V formation? If that's my V formation, a test following that needs to be for a buy. Why isn't my buy going to work from there? Why doesn't my buy go up from there? Let me put a circle in that area so you can see where that area is on the daily. When you look at this on the daily, notice where that buy would occur. Right at this area where the sellers dropped the market from. Okay, you see that big red candle right there? That's what we call a landmine. Okay, you tried to enter for a buy over there, and just as you're entering for a buy, kaboom, wrong direction. Okay, so our goal is to get away from there, but we also are interested in seeing what happens in that kaboom. Are they still very, very strong? I can already feel this word kaboom is going to start continuing on into the course, and everyone's going to be like, yeah, when Naveen says kaboom, what does he actually mean? You know, it's like, so at this stage right here, when we're looking at this, so we're like, okay, he is in an area that we want to watch out for. We are aware that buyers are strong here in the V formation, but at the same time, I don't see anywhere that my sellers gave up. Nope, not there, not there, not there. What I mean by give up is look at the sheer power of those cells. They're pretty big candles, and they're pretty aggressive looking, right? So when I compare the sheer power of the sell to the buy, that's nothing. Sheer power to the sell to the buy, that's nothing. Sheer power to the sell to the buy, okay, that's something. No power to the sell, and then a massive buy. It's like, okay, I know that the big boy is back. Strong buyer. But did my seller die? That is the key. Otherwise, I'm entering into a landmine. It looks clear to walk on, but there's some hidden danger where the moment we step on it, kaboom. Right? So, watching this scenario, we see the market start to pull back, pull back, pull back. And we're like, okay, get away from this area where there's sellers. Get away from that area. So the markets are starting to get away from that area. They're moving away. We get to this red candle. Like, okay, pretty strong red candle. Okay. Now we're approaching an area where there was that strong buyer, right? This strong buyer here. We're approaching that strong buyer there. Now, as we're approaching that strong buyer there, we want to see, come on, baby. Show me some signs that you're alive. Prices come down to here. First sign of green movement. Nothing. Prices come down lower. All right, come on. We got to get some movement here. Nothing. And in fact, the red candles are still strong. Followed by red candle devours it. Okay, so now I'm going to split this up into the next video. We're going to go into the next video, and just keep this in mind. We went through the first phase of standby, no trade yet, standby. Watch out for that landmine. Watch out for that kaboom. Okay, moving towards the next video, I'm going to explain further. Okay, so welcome back to this video now. We're going to continue further. Now, the reason why I split up the videos, because if you have questions, I don't want all the questions to pile up in one area, because these are now different segments of the trade, right? So if you have questions, you guys can ask them relevant to the videos and not just putting them all together, where it's going to cause confusion. Okay, so the next stage to this process, as the sellers bring the markets back down here, notice this guy was able to take out this buyer, which means he's now the new landmine. Okay, he's now the new landmine. We have to keep that in mind. He's now the new landmine. So if that's the case, Okay, we're still watching the seller come in. Then we're saying, okay, sellers are still strong. No signs of them stopping. Here comes the buyer. 1, 2, 3, wick, wick, wick. Nothing. Reaches the landmine. Kaboom. Drops again. Okay, drops again to an area where we had some buyers. Okay, we had some buyers come in here. What do the buyers do here? Absolutely nothing. Look at that. They try, get nothing accomplished. Sellers again. The buyers try, nothing accomplished. The sellers again. But now there is an interesting piece happening. Sellers, and then less sellers, and then less sellers. So you got sellers struggling and trying, but at the same time buyers are trying. Now remember, this is a timing lesson. It means do not hit the buy right now. It means hold your horses. Patience, patience. This is not the moment to do it. All you're doing is feeling the rhythm and saying, I can see something's happening. Okay? I can see something happening does not mean buy. It just means I can see something that's happening. That's all you do. You stand by still. Okay? You get sudden movement of a seller, but when you get the sudden movement of a seller, don't forget that that's where the last landmine is now for your sellers. Okay? Suddenly, the buyers come in very aggressively. And we're like, buyers come in very, very strong. It's like our big boys come back. Did my sellers, all my landmines, finish on the way down? Or are they still very, very strong? If you agree that they're dead, the sellers are slowing down, they're losing patience, they're losing their rhythm, they don't have control over the market so much. There's no lower lows, no nothing. And then we have a V formation that comes in like this and very strong. Now is the time for us to bring in our third weapon, which is a third time frame, and saying, show me the details of this. I want to see the details of this. Okay? Until now, I've been showing you guys focus on 2 time frames. Now I'm bringing it to the third time frame to show you there is more that you can get an answer to. Okay? You can keep it simple still. V formation, test, buy. You can keep it as simple as that if you want. However, if you want precision, you want accuracy, I'm going to show you something here. We went down to the 1 hour to see the details of how the seller came down and how this buyer came up. That's what we're interested in. Look at the seller here. Look at how the buyer came up here. We know that the buyer is now challenging the seller. However, this area is a kaboom area, right? That's where the market's dropped from. Let's see what the kaboom can do. So that's what we're watching now. I'm going to clean all this up so we can keep our focus back to where it belongs. There we go. This was buyer's territory. Okay. So we got a crazy downward movement here versus a strong upward movement here, right? Now, if we're saying, yes, he is challenging this guy and the buyers are coming back. However, we can't just hit the buy right now. We need to see what happens at this landmine. Okay? Every step of the way, there's a landmine. There's a landmine there. There's a landmine up there. There's a landmine up there. Like, these are landmines, you know? Or some people want to call them supply and demand. Don't keep it like that knowledgeable supply and demand stuff. Remove that terminology from your mindset. Okay, temporarily at least. Think of them as landmines. Think of them as problematic areas for your buy. Don't think of it as, oh, there's supply up there, so my trade might not work. It's not so easy. Learn to fear those areas. You must think it's a landmine, and landmine is bad. Like, of course it's bad, right? You fear that word. So now that it's bad, you want to see, okay, let's see what it can do in this area. Let's see what he can do. So we're watching it now on the 60, and let's see what it can do. Sellers coming in hot. Okay, some buyers. Sellers coming in hot again. Some buyers. Sellers coming in hot again. Some buyers. Now, do you feel the confidence of, man, I can just hit the buy right now? But look at all these sellers coming in hot. Sellers coming in hot. What if these are landmines that's going to stop us? we can't hit the buy yet. We're too close. Like, it's me trying to hit the buy right here. I'm hitting the buy. If I hit the buy right here, I'm too close to what could be a danger spot. Okay? I'm looking to put my foot by entering the trade right where the landmine is. That's dangerous. Okay? So we have that kaboom not activating, and in fact the buyers just take it all the way up and they're able to clear this and clear that. That means these landmines aren't doing anything anymore. They're just fake. Okay, we've reached back up to that area where it's kaboom area. Even if that kaboom doesn't activate, look at it where we're buying it. Can we buy it right here? Every time price is here, sellers come. Every time price is here, sellers come. So how can we activate the buy right there? Cannot. Give me a price away from that area and I will buy it. Okay? So let's see what this landmine here does this time. Okay? Let's take it further. This is the landmine we're talking about here, this area. We're going to look at it now and see how does this thing start to react. It's trying, it's trying, it's trying, it's trying, jump back up. Okay. Now, every time price came here, he pushed it down a lot. Prices came here, pushed it down a lot. Prices are here again. Look at these candles. 1, 2, 3. Just chop, chop, chop. A big one, but recountered immediately. It's like, oh, that didn't do anything. These are now the signs of landmine cleared. Go for it. Landmine cleared, go for it, so you can do the buy. Notice how this entry of this area is much, much different than you trying to enter right here, thinking that this could be my V formation and that's my test. There is more to it than just entering at the V formation test. Okay, if you want to get good at this, you need to learn to read the rhythm and saying, am I clear of all landmines, or as I enter the trade, kaboom. Okay, so you want to keep these things in mind. Okay, next video. Okay, so when you put all these pieces together, and you start to realize, okay, where are my landmines? Where are my landmines? And you're constantly looking at these landmines. Don't forget, there's landmines on both sides. Okay? So for example, if I say there's a big buyer here, that's a landmine as well. But what did the landmine do when the price came there? Nothing. That means sellers still have control over the market, right? We want the sellers to start slowing down and their landmines stop having an effect. Watch for all the walls, all the barriers, all the landmines along the way. They need to be, wherever you enter your trade, they need to be away from those landmines. Okay? And you must see all the signs and clues that says, hey, looks like the landmines aren't working anymore. If the landmines aren't working anymore, I think I'm clear for a go until the next landmine. Does that make sense? So, and that's how you play your trades in. That's how you play your trades in. So let me show you this one here. So this is basically the trade I did yesterday. So actually I wanted to show you guys how this whole process happens. That was when I was stocking it. It is around these candles when I saw some struggle. It's like, 3 hours have passed by at this price. Nothing has happened. It hasn't shown any red movements or strong pushes down. I see a higher low happen. Buyers are fighting very aggressively. I saw the seller start to die out here where there's a lot of chop, chop, chop. Remember, that's the V formation we drew, this piece right here. But I didn't trust the test yet because the sellers were so strong, and I was like, maybe they're going to push me back down and I'm going to have a secondary test, and then I'll buy it. I prefer to buy it down here, just like anybody else. I want to buy with my buyers. I don't want to buy at the area where the sellers are, but I need to read it first. I need to read it as well as I can to say, I don't think my sellers are coming back. Okay? And if the sellers aren't coming back, well, that just means you're clear for a buy. Okay, so having that said, we had another client in the elite community give it a shot. The trade started to work out in my favor. Here's the 60 on the right side. It starts to work out in my favor. Pulled back a little bit. Went in and started to go higher and higher and higher. And then it started to bounce and start coming back at me. This is the moment when I had my stops moved to 0. There we are. This is 7 hours. Oops, sorry. There we go. 7 hours ago, right here. Move stops to 0, break even, have meetings back to back today. I won't have time to babysit this precious trade. And 5 hours ago, 2 hours into it later, the trade reaches the take profit area. Okay, it becomes aggressive and goes straight back to the top. And this trade generated $1,500 US approximately for 3 standard lots. So it's not so big of a lot size, but you can see this is just one trade. There's so many trades like this out there. And if you spend the time and energy in learning all these concepts in the right way, then whatever investment you put into this educational course or other educational courses or training programs or mentorship programs, you have to understand one thing. It's going to make you better and better and better. Then all it's going to take is probably 1 or 2 trades and you have everything back. Okay? Now, I'm not saying be aggressive about it and then, I need to make $30,000 or $10,000 in one trade, but take it easy. But as you start getting it, the numbers are not so difficult to reach, and then you'll look at whatever investment you've made with either MPA or 4CB or whatever it might be like probably one of the best investments you've ever made in your life, right? So layer your education, go piece by piece. Make sure anything that you study, whether it's from me or from anybody else, it needs to make sense. It needs to show results. If it doesn't do those 2 pieces together, then it's going to take you really, 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 really long time to crack this market. You need both pieces. One, someone needs to explain to you in a way you can understand. And the next thing is everything that's taught, you must be able to go back, look at your screen and says, can I do this? Okay? Theory can only go so far. You need to make it practical. Use the weeks in between to use it as practical as you want, as much as you want. Okay? All right, so on to the next week. We will be covering a little bit more on this, and we'll look at a little bit more of the timing aspects of surrounding that last bit of entering and stuff like that. Okay? So hopefully I should have another example for you guys, because now we need to go into examples of trades, because we are starting to put this together. You understand now why I could not show you all this in the MPA course, right? So I hope you believe me, my heart is in the right place. I want to train you, but I don't want to overwhelm you. Okay, I don't want to overwhelm you, because at the end of the day, you guys will end up screaming at me by giving you too much information all at once. So we must layer it piece by piece, yeah? Okay, so thank you for being so patient so far. For those of you who made it this far, we're going to make it better. We're going to go further. Until next time, guys. Cheers. See you guys next week.
Okay, welcome back. So another week has gone by. You're going deeper into timings. You just learned how to clear some landmines. You've started to move away from the kaboom areas. And now we're stepping into some more precision. Now, this is something I wanted to something that I was only going to be sharing with some of my one-on-one students and the elite community members in due time. But I figured I'll put this in here so those of you who are already in the elite community or who are coming into the elite community, you get a sense of what's coming. Okay, so this is a little bit more advanced, but at this stage of your 4CB, you will understand. And for those of you who do not quite understand this, it's going to make sense as you rewatch this, just like you've rewatched the MPA, and every time you rewatch it, it's like, oh my god, I can't believe I missed that, or it makes more sense now. It's the same thing is going to happen with this. As you're coming back through the 4CB after some time has passed and you put in a little bit more experience, everything's going to click like, whoa, I can't believe I didn't see that before. Like it's so it's a little bit more advanced, but let's get straight to it. I think you're going to love it. So, a question I want to ask you is, how would you treat your trades differently if you knew almost exactly what's going to happen? Would you start increasing your lot sizes like crazy and gunning it? Would you be more cautious with your risks? What would you do? What would your game plan be? Okay, so that's going to be the topic of this week. It's not psychological, it's practical. And I'm gonna show you how. Okay, theory and all that stuff is fun, and we'll leave that for the other mentors. Let's go straight onto the charts and let's do it firsthand. So I'm gonna walk you through how it happens firsthand, so you have visual examples of what to do, when to do it, and how to do it. Okay, so let's discuss this. Okay, we're gonna start with the next video, and I'm gonna show you what I mean by certain topics. Okay, so a quick recap on your V formations, right? So let's assume in this pound USD chart that the markets are going up. Well, nothing to assume, we can see that the markets are going up here. And let's say on the 4 hours, that's your buyer's territory. And then you come down to this time frame, the 60, you're like, show me some sellers that are willing to buy. Show me some sellers that are getting rid of their product so I can buy it, right? I need some sellers to come in so I can buy it. That's the typical logic, right? So let the buyers turn into sellers, and as they're selling and selling and selling, whenever the selling starts to die out, I will prepare to buy. Now, a couple things with the V formations. What is our standard knowledge of V formations? Okay, well, we get a V formation. If it's an equal V formation and we enter our trade somewhere, we need to keep our stops a little bit healthier below because it can spike down before going. Okay, the other thing is if our V formation is lopsided, okay, or if it's an aggressive V formation, we say that looks like the buyers are pretty much ready to go, something like that, and we just need a test to here where we can buy it to take it up to the recent high. For that, the stop loss goes here. All right, just below the V is sufficient for that one. Now the question should come to mind is, this next stage that I'm about to show you is, what if I can teach you how to put your stop loss here and take your take profits up there and do your entry right there. Okay, that's an advanced technique, highly risky initially, but after you get a hang of it, it becomes second nature like everything else. Okay, as you're progressing more and more, that's why I've labeled this topic a little bit more advanced. Okay, what I'm about to teach you guys right now is what we call the eclipse. Okay, now what an eclipse is, just think about the word eclipse. What is an eclipse? It's when the moon comes in front of the sun, they line up, and it's like ta-da! And then, now, how often does an eclipse happen? Not often, but they do happen, right? An eclipse is the same thing as taking a precision trade. Now let me explain what that means. Now, in your normal trade, this is the type of design you have. You have your overall uptrend, right? Like overall uptrend, followed by some pullback, followed by V formation, and then a test after that, and then boom, takeoff. Right? So our job is to somehow pull up an entry from there after we've cleared all the landmines, like this guy, pull out an entry from this circled area, put our stop loss there, and on our way to make money to the recent high for our exits. Okay, to the next landmine for our exit. Now, here's one thing interesting, is that same trade, if you're able to get your stop there, you just maximize your profit from the same analysis and information. Okay, so I want to tell you one thing first. I am leading you on right now to increase your greed. Okay, I'm leading you on right now to increase your greed because there is a motive for this. Just don't forget, I'm a teacher for a reason. I know how the brain is working right now. So I'm going to show you a couple of things, and then I'm going to take you to what's really important and where the problems are going to come. So that way we can work backwards and be like, oh crap, oh yeah, if I did that, I would have been in trouble. Okay, so let's start with this a little bit. So what is an eclipse? Okay, what is an eclipse? So we're looking at this as a 4-hour 60 as pullback, 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 V formation, prepare for a test that is holding, get away from the landmines so we can buy it. Correct? What if now you're now looking at this, oh, sorry. You're now looking at this in terms of 60-15. And this is your buyer's territory on the 60-15 here. And you're saying, give me some pullback and I'm going to buy that. And when you go down to the 15 minutes, where is that spot? Ooh, give me a second here. Yes, you're going to watch this scrolling in this recording so you can waste time with me. No, it's right here. Okay, so once we get this area, it's like buyer's territory, show me some sellers coming in, and as they die, I will buy it. Now, our uptrend was this fella. Our pullback is this fella. Our V formation is this fella. Our test is that fella. But our target is not this recent high. It's all the way up here, because this trade, even though your 60-15 says buy, don't forget this trade is also part of the 4-hour 60. That's what we call an eclipse. Two trades are lining up together to take off. If you can find these eclipses, you're able to squeeze in your stops and go for the larger profits. And it's actually not a larger profit, it's the same normal profit, it's just your entry is precise with a precise stop. Okay? So normally, let me get you back here. Normally this is your risk to reward that you're looking at. Your entry is here anyways. Your stop loss is below the V. Your take profits is to your recent high. We're looking at a nice 0.7 R, more or less, something like that, right? Okay, let's say if we can get it down to there, let's say, your entry and whatnot. 0.8, 0.7 R as your target. But now you trade it this way, you got a little bit more precision entry as well, and you're looking at it like, okay, well, my stop loss just needs to be below here. Now my take profit is the same area there. I just turned a trade that was approximately 1R or 100% profit into 400% profit. Okay, same analysis, same everything. It's just you've now used your time wisely to make things more profitable. So I'm going to go into the next video now, and now let's discuss the problems. Now that the greed is building up, you're getting excited, like, oh yeah, I see that, I see that. Okay, again, I'm just going to do a small recap. I'm going to go back to the 1 hour. And now that I'm back to the 1 hour, what we're doing is the 60-15 had a trade right there. But for your 4-hour, for your 4-hour 60, this trade, the one that was coming down and down and down and V formation, test, clear the landmine, and then buy there anyways, going up to the recent high, your stop loss is here. That was your normal trade, but now you just learned to say, oh, I know exactly where I am in the universe, because everything is connected. So the 60-15 guy can get the same entry, but his stop loss may hold for the long run. And we don't need to just get out for the 60-15 exit, but we can actually take the exit for 4-hour 60. So that becomes your entry circled area, stop loss just there, take profits all the way to the top. Okay, turning it into a 400% profit. Let's get into the next video. Okay, so at this stage, a couple things are happening, right? mind blown, greed kicking in, everyone's pulling out their Excel sheet like, oh my god, if I take $100 and if I trade this, I can make $7 million in like 3 months. I'm sure all that's going on right now, right? You're getting very excited and you're like, whoa, wow, how come I didn't see that? It sounds so simple and so straightforward. It is, however, here comes the risky part. Okay, and this is very important to understand because as traders, our job is not profit, our job is risk control. If we control risk, we will make more money than those who are chasing the profit. Always, always remember that if the objective is to make money, a lot of it, then the goal is to control risk. It almost sounds counterproductive, but that's the reality. It's like, don't run towards opportunity, but actually learn to control the money that's going to come out of your pocket in case the opportunity goes belly up. Or, and for those of you who don't understand that explanation, it means if the opportunity fails. Right? Okay, so let's discuss some of the risks here. Now, what is the risks that we're dealing with here? When the market is coming down and it does a V formation like this, okay, and then you're doing a test and you're going up to clear the landmine right here. You're going up to clear out this landmine. But you're also on the 60-15. Let me remove this so you can see it very precisely. Also on the 60-15, you have come over this barrier right there of SNR, which means for you, for the 60-15, sorry, that's a buy. For the big boys, as the 60-minute boys, that's a sell. There's a trade happening inside the money spot. Now the money spot is battlegrounds. Now, what I mean by battlegrounds is in this battlegrounds, expect spikes to happen. Now, before, you used to always think, oh, spikes are created by brokers. Okay, I can figure out some clues from spikes from my correlation. I'm going to take you a step further on how do you know when a spike is coming before it even comes. When you understand you're in an eclipse and you're in a money spot, during the fight between the smaller time frame and the higher time frame, during that fight that it happens, expect spikes to happen. Now let me explain to you this risk and how dangerous it is. I'm going to go down to the 15. Okay, and I'm going to show you some of the problems with this. Okay, where is it? Let's scroll again. Okay, here we are. Okay, I'm going to explain some of the risks with it. Now notice, if this is that area where we say, okay, well, this is buyer's territory, and from the 60, right? And we also understand from the 4-hour 60, your big V formation just happened, and we're trying to clear out these landmines. So we're fighting this landmine, and we're trying to see, well, what can you do? Versus these guys are like, yeah, what can you do? I want to buy it too. Right? But they're not looking at the big picture. They don't look at the V area. They're just looking at their own perspective area and seeing, I only see this guy. And that's what I'm fighting with. That's it. They're looking at something small. They're not keeping their eye on the big picture, right? Okay, because that's not their job. So when we're looking at this right here, okay, buyer's territory, here comes seller. Okay, nothing happens. Pops up again. Here comes seller again. Okay, as he comes down for the second time, he pops up. Okay, sorry, let me do it this way. I'll walk you through slower. Okay, so seller comes in. Okay, just follow my mouse, and in fact, I'll make the mouse bigger because this is important. Where's the mouse? Mouse. Here we go. No, sorry, not here. Where's accessibility? There we go. Sorry, 1 second. I'm almost done. Keyboard and mouse. Zoom. Oh, yeah, here we go. Okay, here we go. Massive cursor, right? Like humongous. Okay, so we're looking at this as sellers coming in. As sellers are coming in, buyers come in also. Okay, so it's like, seller couldn't do anything, and buyers are coming up hard. It's like a V formation, but we don't trust it because the seller was really aggressive. Then the sell comes in again, this candle with the big wick on top and a big tail on the bottom. And then the buyer comes up again with a big tail on bottom. This is enticing for people to say, that's my V formation. Prepare for buys, because in a normal scenario, that would be a buy, right? It's like prepare for buys, Now, this scenario here, for these buys, notice the buy entry would be somewhere here where these tests are holding. And the normal guy is going to put his stop loss right there. Now, what in the world is this? It's like, why is it spiking below my stop loss? Is it the broker? Is it the situation? Is it news? Because it does look like eventually it's going to be news, okay, for whatsoever reason, whatever the economic forecast might be. We don't care. But there is something building up. But this spike happens not due to news, not due to anything, but because you're trading inside a money spot during an eclipse. So you can expect a spike to come in. Now, you can use this to your advantage. One thing is risk. Understanding your risk and saying, I want to keep my stop losses very well out of the way because spikes can happen. You can even use this as reference. These are the last landmine for buyers, so I'm going to keep it below that. So I can use that landmine as my leverage in case it needs to spike all the way down to here, and then this landmine goes kaboom and pushes it back up. It's like, okay, phew, I'm safe. So you can do it that way as well, right? That's one way. That's risk control, because now you understand why a spike can happen. So you'll use that information to your advantage and saying, haha, you can't fool me, market. I know what can happen in this situation, and I'm going to be prepared for it. The way to use it in your advantage is you let the spike happen, and as that spike fails, you can say, now prepare to get in. And once you prepare afterwards, your stop loss can be just below the spike. Okay? Now, notice how much focus goes into getting the perfect entry for this. That's why we've labeled this as advanced. If you trade this just normally, you just take the trade where you're supposed to trade, put your stop losses well below the V formation on this 4-hour 60 trade, you're well on your way to profits. That's not a problem. Now it's like you're no longer MPA students. Like we said in MPA, we stop the bleeding, we start you getting you profitable, but now for CB, we start building on it, we start making you more smarter, and we'll try to make you, that same analysis should start to make you some more money. Don't start it yet. Don't start it yet. I want you to leave this lesson in timing for now. I want you to just make this 1R for now, which is like your stop loss is down here. Make that 1R trade, which is 100%. Whatever you're risking, you make the same. Just do that. As you get better, and you can learn that, I shouldn't have bought it there. I shouldn't have bought it there. I should have bought it there. Okay, I'm buying it here. And you watch it again and again and again. And then 20 trades into it, you're like, man, my timing is good. 18 out of 20 times. Then you graduate yourself slowly to, I'm going to put my stop loss here. Again, 18 out of 20 times. Good. I'm going to put my stop loss here. 18 out of 20 times, I'm going to put my stop loss here. Now notice, it's like this. You're just graduating from you're a nurse to a doctor to a surgeon to you now own the hospital. That's what it is, basically. But you have to have that level of experience building up. I don't know if that analogy is good for you guys, but you get the idea what I'm trying to say. You can't just go for the big kill immediately, but I want to tell you that there is a big kill available. Okay? And the reason why I tell you this, because I want to tell you that it's not just, here at the 4CB that you're going to stop. Of course, there is more information coming. Don't think, oh my God, another course. No, we're not. I'm not saying there's another course. All I'm saying is, as you get through the 4CB and you start practicing and you start making better and better trades and you start making some more money, you come back to the 4CB, go through the whole thing again, and as you reach timing and into this advanced concepts, you take it slow, you practice it, and you graduate yourself piece by piece, piece by piece, piece by piece. And as you graduate yourself piece by piece, and you start earning a little bit more money, that's when you need to start coming into the elite community and being like, okay, what else can we do? Because by that time, you will be hungry for more information, obviously, right? And you need a place of research. You need a place of where you can sit down and, okay, guys, how do we trade this trade? What's the best entry we can pull out of it? Okay, so we label these trades as platinum entries. We have traders pulling out trades right there. Okay, that's called platinum entries. We got gold entries, which is anything in here is gold. And then anything after that is silver, which no one likes. Okay, so platinum entries is like messing around. We're like, okay, top dog people. We're like, can we catch this price? So it becomes a game afterwards. Okay, so right now, keep practicing, keep studying, and just wanted to give you guys little insights on what else can be done. So now you understand the risk. Okay, so the first thing we talked about is, what if you know these things ahead of time? What if you know a spike is coming? So think to yourself now, with this knowledge, are you going to be gunning for making a lot of money? Or do you have the discipline and control to say, I understand this and I will reach this, but I need to control my risk first? If you agree with me, I want you to leave a comment below that says, I will control risk first. If you guys have done my MDR course, which is Motivation on Daily Routines, remember, verbalize it, take action. So by typing it, you guys are verbalizing it that you will control risk. I want to see this from each of you students who's watching this video right now. So the comment below should read, I will control risk over trying to make profits. Okay? And I promise you, hopefully before the end of the 4CB, you will be making a lot more money than you are right now. Okay? You're going to make a lot more money then. Okay? So this calls towards the end of the timing series. Okay? It was a long journey so far. We still have roadmap to go, which means let's put this all together, baby. Let's put every piece of the puzzle together. Let's get all the gears, nuts and bolts and everything, and let's put it all into action. Let's get all that stuff ready, and let's throw in some psychology in there as well, so you get a sense of what more needs to be controlled in the mind. Okay? So we're not going to end this course in a way like, oh, if you can't do this, well, it's psychological problems, good luck. No. That's just rude. That's just mean. We're going to solve every step of the way, whatever we can, and we're going to get into the details of it. Okay? So stay focused. Study this. If you do not understand, don't worry. It's not something you need to learn right now. But if you do understand it, some of you guys are already senior traders coming into this. You guys are looking at this, looking at a fresh perspective. And this might be research that you haven't noticed. So this is my research that I've pulled out over the years. And I'm sharing it with you guys openly right here. It's something like I said, I only do to my one-on-one students who come in for $20,000, $30,000. Or my elite students sometimes when I see they're really progressing, doing well. So it's a gem that I'm opening up for you guys. Okay, so I will see you guys next week, and we will take it from there. Cheers. Bye for now. Okay, welcome back, guys. So this week we're going to be talking about ranges a bit. Now, I know I told you guys last week that we're going to finish up with the timings and move on to roadmap, but I had some emails coming in from clients saying that, we only talk about trend pullbacks. How come we don't go into ranges? Because ranges are still a bit more advanced. However, if you guys ask for it, I'm going to share it with you right here. And I'm going to label it advanced because it won't make sense right now, or it's not something that can be easily obtained right now, but at least I can give you the aha moments currently. so you can actually experience it, understand it, and when time comes, you will be able to take the trades accordingly. Okay, so let's understand first of all what's a range and how does it happen, because that's the most important thing, right? Okay, like for example, let's take a look at this piece here. Range. Okay, let me get you another one. Got a little bit of range here. Okay, we got some ranges here. Okay, now there's several types of ranges. Okay, we had the two different types of ranges. Type number one is a range that is part of a trend, just like that. Markets are going down, and then they chop, and then they go further down. Okay, that's a trend continuation type. There's another one who also looks very similar, but it's masked. What this range is, it's not a range, it's a money spot. It doubles like a range. It's like a hidden personality. The reason why, these ranges are going to be a lot more aggressive. Okay, they're going to swing a lot more, they're going to get a lot more aggressive, because here, a common question might be, well, ranges, whenever the prices get to the bottom of the range, they take off. When they get to the top of the range, they take off. So it's like, well, how do I get in? But precision cannot be the same as a trend pullback. But the reality is, yes, it is. The precision is just like a trend pullback. Okay? It's like this. You have a trend pullback is like this. Okay? Just imagine you tilt the whole scenario. If I can tilt it. Okay. Well, I can't tilt it. Okay, imagine if you tilt the whole scenario, then it starts to look like this. The down doesn't go, and the ups are holding. That's what a range is. It's this thing shifted sideways. Okay? So the movements is the rubber band man slowing down? Is the rubber band man slowing down? Is my big boy back? Okay, is this my V formation? Is this my V formation? They all look like V formation, so which one is it? Okay, so that's the advanced part that we need to cover. So to put it into perspective, we're going to first go into the ranges that go with the money spot. Okay, we're going to discuss this one first. So on to the next video. Okay, so we're going to be discussing this range right here, right? So imagine this. This is your nice upward movement. Okay, overall upward flow, followed by, let's say this is the daily upward flow, right? And then you come down to the 4 hours, you're like, okay, give me a pullback. Pullback starts to come in, V formation, and then the test phase, the phase prior to takeoff, is gonna develop some ranges. Now the ranges is not just, oh, what's going on here? Let me see. Does it buy? I'm going to hit the sell. I'm going to hit the buy. I'm going to hit the sell. I'm going to hit the buy. The ranges come from a story externally. It's just a microscopic view of what is trying to happen. So let's understand that, what's trying to happen. Before we get inside the range and look for details, we must first understand what our range is trying to do. Okay, so what our range is trying to do if we look at it from the outside. Okay, after this V formation happened, we have reached this landmine here. Okay, that big seller that came down very aggressively hits the sellers right there. Okay, sellers are not so strong. Buyers come right back up, react again from this area, not so strong. Buyers come back up very aggressively, seems to be clearing out this area, and then the final phase of weakening, and then the takeoff takes place. The range goes through this story, but then the person who is looking at the range in detail is unaware of which direction is a range supposed to end up in. Because a person would be looking at this as, well, if it reaches the top, hit a sell. If it reaches the bottom, hit a buy, without an idea of why is it there to begin with? What made this happen? Is it a money spot? Is it not a money spot? Okay, so we have to understand this logic here. So it's like, okay, is this market slowing down on the way down here? Is this a V formation here? This will confuse a lot of people. Like, oh, well, if this was my pullback and then pullback and then that's my V formation, why is my test coming down so low and then it doesn't go to the recent high? It comes down again and then it goes up, right? So you're getting all kinds of weird situations, and you're like, well, then which one is it? How do I pay attention to what's happening? Okay, we don't know it's a range until we draw it on 4 edges, right? Which might mean initially we might think that's a range on this time frame, right? We'll have several touches and we're like, oh, okay, well, that's a range. We're going to buy from here, sell from there, buy from here, sell from there, loss. Okay, then the range widens, it gets up to here. But what if I was to tell you, remove the ranges and read it for what it is? Read it for what it is. Okay, it becomes a lot easier, doesn't it? Because if you put the range there, then now you're identifying a range type mentality, which is, I need to do this or this because that's what a range is expected me to do. But if you remove the word range, if you remove those lines of a range, and you're looking at it like, okay, well, we got an uptrend here. Okay, you have some idea of the story from the higher time frame that there is some kind of a landmine up here that's causing this to come back down, but the sellers can't do anything. Sellers are coming back, buyers come in. We don't trust that's a V yet. Sellers are still coming back, struggling quite a bit. And then that's a V, but that V doesn't look lopsided or anything. It looks 100%, and we're like, if it's 100%, our stop loss cannot be just below our recent low. It needs to be a little bit healthier, right? Okay, we have to keep it some distance. However, we need to monitor the test. And as the test comes in, and we're watching it slow down, slow down, slow down, and as the buys come in, and they start reacting off of this area, this is where the landmine is. Reaction, I don't know if you guys can see it. Let me zoom in here. Reaction 1, nothing. Reaction 2, nothing. Reaction 3, nothing. So many times it's bouncing off of that landmine, but it's not doing anything. These are giving you signs that I don't think it's holding. I don't think it's going to do anything and push me back down, because last time it only pushed down that much. After that, it struggled on the way down. And that's when you break free and you let loose and you go up to the top and you're approaching the next landmine area. Okay? However, we can't be working with a scenario that, well, is he going to go and make higher highs? Not yet. That we have to read the entire story of what's happening before we can read the higher high sequence. Channels are the very same way as well. Okay, so let's look at another example for something like this. Okay, so now let's take a look at this other one here, the one prior to that money spot here, and we look at this one here, and we're like, okay, well, that one doesn't really look like a money spot. It can, but it's coming down in like a downtrend. So how would this one be analyzed? Obviously, we don't see the future of this down, but up until this point, let's watch it as a range, and let's also watch it as a trend. Obviously, it's a downtrend up until this point, so we know it's seller's territory. Let's jump down to the 60. Okay, here we are on the 60. Let me just scroll to that area. Okay, here we are. Now, why does this thing develop? Why is this range there? Okay, if we look at it in this sequence, will we ever know to hit the sell from here? And if we do, how big is our stop loss supposed to be? Is that candle gonna take us out here? What if that spikes us out? Okay, what if I sell from here and I make money and I'm like, oh, good, it's working. But then when I sell from here and I get stopped out, it's like, oh, that didn't work. And then I buy from here thinking it's a range, and that stops me out. If that doesn't stop me out, this guy stops me out. So it's like, what's going on? Why is my range so not perfect? And that's the problem with ranges. Not all ranges are made to be to perfection, right? Where they're just pinpoint, like if I draw a line there, then that is the line in the sand. The price will not pass it. No, that's very dangerous. That's very dangerous because we cannot determine if prices are going to spike the ranges. And if we put our stop loss all the way out here, for example, yeah, then whether you trade ranges or nothing, it won't matter. So we don't want to do that either. We want to read the story as well as possible. So let's take a look at this carefully. Let me remove the lines now and read it with me in terms of the downtrend. This was the downtrend. This was the seller's territory that we saw on the 4 hours. Okay, I know some of you guys might be like, "Oh, isn't the line supposed to be here?" Yes and no. I'm looking at this based on the 4-hour picture that's implemented in my mind, and you guys can rewind a little bit and see it there. But seller's territory overall, right? Now we're looking for a pullback to come in so we can do the selling. Pullback comes in once. Okay, rubber band man running. He rests. He's running, barely makes a higher high, and then he rests what looks like 200%. Now, according to this, my buy should be dead. It's time for sells. But there's something unusual happening here. The first run that he did, look how aggressive that was. Okay? Also what we call the landmines, right? It's making a landmine on the way. It's going so hard and then resting a little. Going so hard, no higher high. So there's no sign of any struggle of the buyers. They're just going up full solid green candles, like green, 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 full solid green candles. And then the sell comes in, making a V formation. It's like, what is this? Is that the sign of my big boy? He makes the distance, but look at him. He's getting pressure. That means my big boy, even though he makes it down there somehow, what kind of pressure is he getting? Who is causing him problems? This makes the price go up yet once again. Now, at this point, we might feel we have 1 point, 2 point, 3 point, 4 point. So it must be a range, but that's an incorrect way to look at the markets. If you look at the markets like that, what's going to happen is you won't understand the story. You must understand the story that price is getting re-pushed up from here, and we will see what happens at these areas. We don't know yet. We will see what happens at those areas. All we know is the buyers are currently dominating. So I'm going to go in a little bit here so you guys can see it nicely. Okay? So in this phase, let me get my marker back. Here we go. Yeah, so in this phase, let's go. In this phase, we're seeing buyers, rest, buyers, and then choppy, nasty sellers come in somehow, followed by, I would even argue it's sellers till here, nothing there, sellers till here, doesn't look so great, and then the buyers kick it back up. Now they kick it back up, and we're like, is it gonna do something here? Stops for a bit, goes higher, comes right back down, because apart from this landmine, there's also one up here. Okay? Or if you want to call it a supply or something like that. So that one, there's something up there that caused aggressive sellers to come in. So it stops the market there, and we're like, well, let's see what happens. We don't know. We don't want to hit the sell yet because we just saw buyers come back. So this is something as traders of you and I, we're like, I know this is a range, but I will not touch it. Okay? I will not touch it because it's too soon to touch it. So the sellers come and hit it all the way down. Okay, now here, the sellers look aggressive, much more than the buyers. Which means, is that my V? After all this weird struggling of the buyers, no higher high, struggling on the way up this time, followed by a V formation with some aggressive sellers, I guess my sellers are here now. Here's the next tricky part. Ready? Here's the next tricky part. Oh, sorry, I need to delete this. Okay, I'm just gonna do it like this. Here's the next tricky part here. Now, we just said that these buyers were struggling on the way up, like chop, 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 no higher high. Finally, we get a V formation that looks worthy enough to call our big boy. But now it's at the bottom of the range. And at the bottom of the range, we're thinking, well, we're supposed to hit the buy, right? Do you notice how all these range traders are actually getting in on the wrong time at the wrong spot? They're thinking it's a buy now when we're like, oh yeah, I think our sellers are getting ready. But everyone who's doing the ranges is like, that must be a buy. Well, if I can, just squeeze in some profit. No, we don't want to do that, right? We don't want to do that. And it's a horrible, nasty mess to get into. Then the test phase happens. Goes up, crashes down, rebounces from this area, goes up, reaches the same landmine, starts to crash down. There's a landmine here for the buyers still, okay? Notice both of these times, buyers were aggressive, which means still stand by, stand by. Now, after a V formation, you arrive to the test phase or the money spot phase, right? So let me do that. Let me show you. Let me clear this out. And let me zoom back in. Sorry, let me zoom back in. Okay, so this was your V formation, which means your test is now going to show you some kind of a money spot. And what do you know? Another range. But this time you have more control of what is really happening, what the story is actually doing. And your job now is to play the range rules based on the story. You do not do it based on the range, but you do it based on the story. So, strong buyers up, no, stand by. Strong buyers up, no, stand by. Okay? Buyers come up struggling right now. We're like, perfect. We're starting to see some sell signs coming in. We want to sell as close to this upper line as possible in case this landmine reacts and takes the price a little bit higher. We should be able to survive that. Okay? If we enter down here and then it bounces from here, then every loss that you're in, and you're not, even though it goes down later, but that moment when you're in a loss, the fear and the emotions will generate wrong decisions. But if you're in profit, like you enter here, for example, just an example, you enter here, trade goes down to here, and then bounces very aggressively till here. You're still at ease, mentally speaking. You're worried for your profits, but you're at ease. Okay, that's the difference between the two scenarios. That's why it's important to monitor a range like that, to be like, I need to know where my levels are for my range. But now do you see when a range comes into handy and when it doesn't? Okay, so again, this is a very advanced topic. I hope I went into this in detail for you to show you the two different types. So this type, that one that's not in the money spot, I'm not so concerned about. But it will eventually create a money spot. Whenever there's a range with a money spot, those are the ones I'm actually interested in trading. And in fact, I'm going to show you right here. Ta-da! Okay, so here is a trade that I've been trying to catch. You can ask the elite members, oh my god, how many times I've attempted to catch this for precision. Looks like I'm getting rusty. Let me show you here. Okay, this whole sequence is inside this massive range. If I show you on the 4 hours here, okay, it's inside this massive range, and it's like, well, do I sell it from the top, buy it from the bottom, and what's the sequence? It's the same thing happens. It depends on where you're reading it from. Okay, what I did was I saw the sell come in here. Okay, I was reading the story. I'm like, I know the market's in an uptrend. Okay, and we're slowing down up there. But I want to read it as if it's my trend. So I don't believe the buyers are back yet. That doesn't look like a buyer to me. Sellers come down, and that's quite aggressive. Let me zoom in. Okay. Bad idea to zoom in like that. Let me zoom in properly for you. Okay. Sellers come in quite aggressive, but buyers come in also quite aggressive. They don't do much. Then the sellers come in starting aggressive, but then they chop towards the end. Followed by an aggressive buyer, which is a lopsided V formation, hits the top, and I'm like, perfect. Because the top, I need this to push the price back down. I'm now using the top of the range as my leverage, saying, I'm not going to sell from up there. I need all the people who range trade to sell it to me. As the sells come down, and as they struggle, I had to go down to one time frame lower to catch this. I catch my buy right in here with full fear of, is this landmine gonna hurt me? Okay. Of course, I would love to catch buys from here. Of course, at that moment, it didn't happen. Trades went up, started for a profit. I was up 3-4 R's, and then boom, it came crashing down and took me out. Okay. Then my next attempt this attempt that I did, and then I did some silly attempts in here. I will explain. I'm gonna do a whole section on silly mistakes and silly attempts, and I'm gonna show you my own silly mistakes as well, where the problems come, so you can watch from my mistakes and avoid doing them yourselves. Okay, so then going down further, sellers came in hard. They slowed down a bit. Then they start getting choppy. Then our big boy comes in. Then they get choppy again. And that to me is, I think we're getting very close to taking off again. We are now in the money spot, which means these guys want to sell, support resistance sell. These range people want to buy. And it's creating this mini range here. Like if I draw it like that. I know it's becoming a mess, but let me just delete the whole thing. Yeah, I'll just delete the whole thing. Okay. It's becoming a mess, right? Okay, so it started to build up in this area. Started to build up in that area after trying to do from sells, but the sells aren't working. They reach this area and they keep getting hit. And the sells were struggling every time they're coming out, like chop. You know, they're slowing down. Look at the first move, very powerful, very aggressive. Look at the next move. And then look at the next move. But as it gets choppy down and the buyers are getting more and more aggressive, like they're boiling, it's like I can grab a price again from this low area here, put my stop loss down here for precision, and I want to go high, but this time there is a chance that I can go higher. I exited this trade over here. And I took like a couple thousand out of this, but the trade actually went a lot higher. So my initial target was much higher, but I didn't have faith in it, and that backfired by not having faith in this trade. And well, there you have it. So I made less money than I should have. Okay, if this comes back to test down again, because I look at this as a V formation, then I will retake the buy again. Okay, so I hope by this moment you're looking at ranges and you're like, I didn't know ranges are like traps. Okay, they they look like you're supposed to trade it in a certain way, but they're actually a story that's being played out from a bigger picture. Okay, if you keep that in mind, then every time you see a range and you treat it like a trend, you will become a lot more your performance will get a lot better. Okay, and then you won't just keep hitting it from the bottom of the range without a reason, or hitting the sell from the top of the range without a reason. Always put story together with it. Okay, so if this video blew your mind, let me know in the comments below. So I want to know how much of this advanced stuff makes sense to you, or if you're confused, let me know also. So I want to hear your feedback on this below. But so like I said, a lot of you guys were emailing about ranges, and I wanted to just get it out there for you guys to tell you how precisions work with ranges. Okay, hope it helped. I'll see you guys next week. Cheers.